with social media and technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? the superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
It's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette
I'm a writer for Bloomberg News for the global business team.
and Kim Basine
And I'm the U.S. luxury reporter at Bloomberg.
to find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW.
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
with violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit, because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits will help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy, because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. The company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues. that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes, because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent, and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are 3 keys to transport and where the industry is going: autonomous, electric, and shared. And I think all 3 are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
mean to a
means
layman like
feathering
me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber. There will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place, and we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no, and we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
Will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also...
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
You
a
had
brand.
that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for
Do you want to
everyone.
make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places
It's just-
for some people.
it's telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward. In 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that is this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company. And he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Yes, indeed. Live from our Bloomberg Interactive Brokers studio, streaming on YouTube. It is Wednesday. It's a Fed Wednesday, December 2nd, 2020. Carol Massar, along with Tim Stenovic, host of Bloomberg Quick Take. And we are focusing on these Fed Beige Book headlines, which is really cool because it's anecdotal evidence about what's going on in the economy. Kind of takes maybe a few minutes to kind of get through the Bloomberg, and we'll break them down. But it gives us an idea of what those regional Fed banks, Tim, are saying about what's going on, what they're hearing from businessmen, what they're hearing from people overall.
Yeah, anecdotal is always good, of course. It backs up data.
Yep.
And we've been getting a ton of data. We understand consumer sentiment, but we want to hear more about how people are feeling.
Right, and we're going to find out, too, how small business is feeling. We've got a guest later on coming up about that. So we'll break those Fed headlines for you in just a moment. First up, though, let's get a check on that trading day. Lots going on, Charlie.
Indeed, little change right now for the S&P, Carol and Tim. We've got the Dow Jones Industrial Average down 0.2%, S&P down less than 0.1%, retreating from a record, NASDAQ down 0.3%. But bottom line here, stocks are lingering near records as a jump in crude oil prices pushes shares of energy companies higher. We've got the price of crude, West Texas Intermediate up 1.9%, $45.39 a barrel. Gold up 0.8%, $18.29 the ounce. Look at the 10-year, 0.94% right now. And after earnings, Salesforce.com down 8.8%. The big story with Salesforce, of course, though, it is buying Slack Technologies for $27 billion. Many investors see that number as being expensive. Again, Salesforce down 8.8%. Slack lower now by 2.5%. I'm Charlie Pellet. That is the Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Tim Stenovic in our Tim, did I say Ted?
No, you said Tim.
I told you. I warned you. It's going to be a bit of a crazy day. Let's hit the Bloomberg Business Week agenda because we do want to break down the Fed Beige Book and get an idea of what we heard from those regional Fed banks. Let's bring in our team. Joining us right now is, of course, Michael McKee, International Economics and Policy Correspondent at Bloomberg News, on the phone from New York City. Also, Dave Wilson, Stocks Editor at Bloomberg News, on the remote access from New Jersey. He is keeping an eye on the equity trade. Of course, this portion of Bloomberg Business Week brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. So let's learn more about these Fed latest we're hearing from the Fed regional banks. Michael McKee, what do we need to know?
Well, basically, the anecdotal reports are keeping pace with the story that's being told, put it that way, by economists and Fed officials that the economy has slowed. The latest Beige Book shows economic activity continuing to increase across all districts, but the pace of growth characterized as just slight to modest. It varies by sector. Manufacturing increased at a moderate pace, they say. They love those M words. And there's still steady demand for new and existing homes, but banks are worried about defaults rising. There's a leveling off of retail sales, consumer spending growth starting to drop off a little bit. And there are concerns among restaurateurs, of course, that cold weather will slow sales. Employment increasing in almost all districts, but they say growth is slow. And there is a tighter labor market than people think because workers have health and child care concerns. So some have to stay home.
Yeah, I know a lot of people who are wrestling with that right now. Yeah. I do wonder if this adds any sort of urgency to Congress to get a deal done sooner than later.
You would think,
You
right?
would think.
Mike?
You would think, but then again, this is Washington we're talking about. It.
Yeah.
It doesn't appear that we're significantly closer. There is some slight movement underway with the Treasury Department meeting with Nancy Pelosi, Stephen Mnuchin meeting with Nancy Pelosi, and the Democrats, in both the Senate and House, sending a new plan to Mitch McConnell, the Republican leader, yesterday. Nobody characterizing what's in it, but nobody seems to be very enthusiastic either. McConnell put out his own plan, which was very similar to his previous one. The Democrats rejected. So at this point, we don't have any reason to think that necessarily we're going to get anything. That was the sort of theme of the hearing today, where Jay Powell and, Powell in particular said we need more help, we need more stimulus. And Mnuchin said he's open to it, but of course has to be on the president's terms.
Right, and New York Fed President John Williams saying today the U.S. economy is still in a deep recession. The pace of recovery next year would depend on fiscal policy and the timing of a coronavirus vaccine rollout. We know that. Hey, Dave Wilson, come on in. Market's a little bit lower today, but we're definitely off our worst levels of the session. What's up with that?
Yeah, we're also off the best levels of
Yeah.
the session. We've kind of drifted down a bit in the last few minutes. So, put it all together, not a lot of movement, certainly not a lot of follow-through to the gains we saw yesterday. It kind of looks like a market that's looking for leadership to some extent. There's sort of no clear theme emerging from today's trading. You look at the best performing stocks among the 11 main industry groups in the S&P 500, you see energy, okay? I mean, which kind of makes sense. The area has done well lately, having a contrast to what we've been seeing for some time. And then you turn that on its head, look at the worst performer, raw materials.
Yeah.
So, which doesn't make sense because we've tended to see energy and commodity producers move together, in the past few weeks as there's been this sort of wholesale shift toward cheaper value stocks, that sort of thing. So, there's really no pattern kind of emerging here. And there's not a lot to kind of set up a pattern, you might say. Some scattered earnings reports are here and there. Certainly the deal that Salesforce.com made to buy Slack is getting people's attention, and not a good way for Salesforce.
Yeah.
I mean, the shares are down almost 9%, biggest drop in the S&P 500. Well, they had kind of a disappointing forecast for earnings in their current fiscal quarter, which didn't help matters either.
Right.
But you can find those sort of small stories. Big story is not a whole lot of direction here.
Dan, I'm so glad you brought up Salesforce because that's certainly the story playing out when it comes to tech today. I mean, a massive acquisition announced after the bell yesterday, of course, to be expected.
Right.
But investors sending shares of Salesforce down more than 9%. I'm curious what the message they're sending is. Is this Mark Benioff paid too much for this company?
Well, I mean, it's coming at a time when the business maybe isn't performing up to par in a sense, you might say, because at least not as well as analysts might have expected. And you have to consider, I mean, Salesforce has certainly done pretty well this year, even with today's decline, still up 35%. So, to the extent that people are kind of going back and, rethinking the numbers going forward and then having to add in the effect of the Slack deal, you can understand why the shares are taking a bit of a hit here.
I would also think that this is Benioff saying to Microsoft, here, the ball's in your court. And you're going to see margins probably. There's going to be a little bit of a pricing battle for folks who want to be on these kind of team platforms, right? Especially in a pandemic when so many people are working that way.
In the startup world, people love Slack. In the media world, people love Slack. But you cannot underestimate the power of Microsoft.
I was just on a
Microsoft
corporate
Teams.
call with chief marketing officers, huge companies who know their brand, and they're talking Microsoft Teams.
Of course, because they have decades-long relationship with Microsoft. How easy is it to implement Microsoft Teams when you've been using Microsoft Office for years?
Yeah, exactly. Hey, guys, thank you so much. Michael McKee, international economics and policy correspondent at Bloomberg News. Dave Wilson, our stocks editor at Bloomberg News. He's going to be back a little bit later on. I agree, but I mean, Benioff, man, they are really, it's an inquisitive company. They know how to integrate these deals, right?
Yeah, and finally, many people are going to be using Salesforce who never thought they'd be using Salesforce product, right?
All I can think of is the Salesforce Tower in San Francisco.
The thing's
massive. It's pretty impressive. Let's talk about the show. We got a lot of good stuff coming up. We're going to talk about the virus with Dr. Renee Duwa. She's founder and chief medical officer of HEAL. I grew up, actually, I was from a large family. I think you've heard me talk about it. But the pediatrician would come to our house. It's just the way they did it. And that's kind of what they're doing.
Yeah, and I want to hear from her about what she says about actually going to the doctor, because so many people haven't gone to the doctor because of the coronavirus outbreak. Carol, I haven't gone to the dentist since January. I probably shouldn't tell you that. I'm in a room with you.
You should go. I've even had a root canal.
I'm like kind of scared to go to the dentist. I'm not joking.
I will say, though, a headline crossing Angela Merkel of Germany saying Germany will extend its partial lockdown until January 10th. So we continue to see these headlines. We're going to get to presidential pardons. You and I and our team were talking on the morning call. There's a lot of interesting stuff going on around there. So we're going to kind of get to the lowdown on what prosecutors are looking into here in the U.S. and what are the rules on doing it. We've got the most read story on the Bloomberg, Gary Cohn of Goldman Sachs, formerly playing hardball. He's like, I don't want to give my money back.
Who does?
Who does? Never get between an individual and their money. We have so much to come over the next 4 hours, so stick around, folks. But right now, we do want to get to world and national news. Headlines continuing to cross the Bloomberg. Hey, Nancy Lyons.
Hey, Carol, thanks. British officials are green-lighting the world's first shot against the coronavirus, approving emergency use of a vaccine that was developed by American drug maker Pfizer and Germany's BioNTech. Health and Human Services Secretary Alex Azar says it's a positive sign for the U.S. as well.
The approval of another independent regulatory body should give Americans additional confidence in the quality of such a vaccine.
The FDA wants 2 months of safety data before approving a vaccine, which is a requirement not necessary in the UK. Well, with shots possibly rolling out within a few weeks in the U.S., CVS and Walgreens are working on plans to administer vaccines in tens of thousands of nursing homes and assisted living facilities all across the country. Federal advisors yesterday urged that residents at long-term care centers be the first in line for the COVID shots, along with at-risk healthcare workers. The pharmacy chains will work with more than 50,000 centers that have enrolled in the program, with plans to start hosting clinics as soon as the vaccines are approved. President-elect Joe Biden is talking with workers and business owners today to learn how they've been affected by the pandemic. Georgia Secretary of State Brad Raffensperger says elections officials in his state are expected to finish a second recount of the presidential election by tonight's midnight deadline.
We have seen no substantial changes to the results from any county so far, and that's what we expected.
He says now it's time to move on and focus on the state's upcoming Senate runoffs, which are set for January 5th. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Masser along with Tim Stenovic, Bloomberg Quick Take, which you can catch at 9 and noon.
You can, and Carol, I got to be honest, you can't get away from me on Quick Take. So we're live at 9 and noon.
Is that a good or bad thing?
It's fine. It's fine. We're live at 9 and noon, but you can check out our replays throughout the morning and the afternoon as well.
Yeah, and I bet you talked a lot about the virus
And
today.
we're live at 4:30 and 5 as well.
Okay,
New shows.
Good to know, and I bet you guys talked a lot about the virus.
Yes, we talked a lot about the virus today. Look, there is a lot of
I'm
news.
laughing, and I shouldn't be, because it's really serious headlines. But I do feel like we're making progress with the UK in terms of approving a vaccine, getting it out. People are talking about rollouts. We're starting to hear numbers about where it's going in terms of states.
Yeah, we heard today from Governor Cuomo here in New York that he expects Pfizer doses for 170,000 New Yorkers.
Sounds like a little, though.
It does. So 170,000
That's the first thing I thought.
Sounds like a lot of people in basically any other city besides New York, right? We have more than 8 million people in the city. But remember, these are the most vulnerable people that are going to be getting this first. And that's who needs it, because they make up the majority of people who are their mortality is significantly higher when you get older.
Well, they're on the front line. They don't have a choice, right?
Yeah.
They're going to work. We need these people to be able to go to work to take care of people, who get the virus, but also routine, medical situations. We don't need a shortage of people. We need to make sure they're safe. So I'm totally all in on that. But it's interesting. So the UK becoming the first. We did have Cuomo talking 170,000. He says maybe by December 15th. But we're hearing about tighter restrictions over in Italy during the holiday season. I think this is what we're all kind of on pins and needles about, right, Tim? About what's going to happen over the holidays, the rest of the holidays.
Yeah, and I'm still waiting to see what happened because of Thanksgiving. And, the nice thing about people getting the vaccine early is that even if we don't have vaccines for healthy people, we will start to see the effects of those early vaccines soon.
Yeah, absolutely. And I thought what's interesting, too, the CDC coming out and cutting quarantine time for individuals exposed to the virus by as much as half. So this is just, we're learning so much more as we go along, right?
This is science playing out in real time.
Yeah, I always say it when we're talking to folks in the medical community, I'm like, we're really truly seeing how the sausage is made when it comes to these kinds of viruses and getting a vaccine. All right, you're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. This headline from the Bloomberg Professional Service. Pelosi, Schumer backing a bipartisan plan as a base for stimulus talks. Also repeating an earlier headline, German Chancellor Angela Merkel says Germany will extend a partial lockdown until January 10th. Stocks holding close to records. Little change. Lower right now in the S&P. Down a point. Lower by 0.1%. 3660. Very close to a record. We've got the Dow down 31 points. Down 0.1%. And NASDAQ is down 32. For NASDAQ, a drop there of 0.3%. Oil companies moving higher along with the price of oil. West Texas Intermediate crude up 1.6%. 45.28 a barrel. ExxonMobil shares, they're up now by 3.9%. BP up by 4.4%. EOG Resources up 3.4%. Pioneer Natural, broad swath of energy stocks there. Pioneer National up now by 2.5%. 10-year yield, 0.95%. Again, recapping equities lower, little changed. S&P down by 0.5 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I do love when you say swath, Charlie. I'm just going to put it out there.
It's not a word you hear every day, but
out of your mouth, it's just perfect.
But you know what, though? I had to talk to Alex Steele about which energy stocks to include. She came back to me and said ExxonMobil, BP, EOG Resources, and Pioneer Natural. Indeed, a broad swath of energy stocks.
She's our energy guru.
Yep.
All right. Charlie, thank you so much. You're listening to Bloomberg Business Week. So it does feel like we're making some progress when it comes to the virus, although we did mention that headline out of Germany that they're going to extend their partial lockdown until January 10th. But Tim, I do feel like the UK becoming the first to approve a vaccine, right? And we are moving towards that logistics phase. We talked about this earlier. I do feel like we're making some progress.
Yeah, we are starting to see the light at the end of the tunnel.
Yeah, which feels really, really good. Let's see what our next guest has to say about that. She is back with us, Dr. Renee Dua. She's founder and chief medical officer of HEAL. It is really providing medical care in the privacy of your home. I kind of love to hear more about what they're talking and what they're doing. Investors include Lionel Richie, Qualcomm founder and chairman, or former chairman and CEO, Paul Jacobs, and also BET co-founder and investor Bob Johnson. So some really interesting investors backing them. Renee is back with us, joining us from Los Angeles. Renee, good to have you here. How are you?
I'm well. How about you? Thanks so much for having me on.
Yeah, we're doing okay. Just watching the headlines. What are you guys seeing out there on the West Coast and out in LA in terms of COVID?
Well, much like you're seeing, we are seeing rising cases. We are seeing, here in LA, we have a mandatory stay-home order, and it's going to go through certainly the children's winter break and probably into January. So a lot of the same things that you guys are going through as well.
Wow. Dr. Dua, how is it changing the way that you're providing care to your patients?
Well, luckily for us, we were always, in some ways, prepared for a pandemic, I suppose.
Wow.
It is
so
wild.
we built software that allows patients to stay home. We route and dispatch our medical teams to our patients' homes. We use remote monitoring devices, and we use telemedicine and video to see our patients and keep an eye on them, give them a very high-touch experience. So we are very busy, which I think is wonderful for the patients and wonderful for us.
Yeah, I want to make sure I understand this. You were doing this before telemedicine was sort of a household name, right? It was before
You're right.
everybody was telling you to download these apps so you could actually go to the doctor without going to the doctor.
Yep, you are exactly right. We always considered that having video accessibility to your doctor was a part of a coordinated care experience. And so we've had video and telemedicine capability for a long time so that our medical teams en route to a house call can keep an eye on their patients.
What's demand been like versus, the telemedicine versus people actually going to homes? Tell us what you've seen in terms of trends over the last 6, 7, 8 months.
Certainly. In the beginning, people were scared even to have us in the home, right, which is understandable. But as things have loosened and we've come to understand how COVID operates as a transmissible infection, there are those patients who recognize the importance of having a physician do a proper examination and the importance of their screening examination. To give you an example, if a woman hasn't had her mammogram this year, it's an urgent matter at this point, at the end of the year, and we want to make sure a woman has breast cancer screening every single year. So I think patients are now feeling more understanding about us wanting to come into the home They realize we wear PPE. They realize we're going to send them to a possible imaging center for a screening exam that we cannot do in the home, and they are accepting of it. And then to minimize risk, they're comfortable with a video chat or or allowing us to do a remote monitoring of their blood sugars or their blood pressure so that we can keep an eye on them without having to be in their living room.
Have you heard anything about getting a vaccine for yourself or for any of your providers who are going into homes? Because I was talking with some doctor friends over the weekend who work at a big hospital here in the city. And, you know, these are the people who are supposed to be getting their vaccines, and they haven't heard anything.
No, and I haven't, and my colleagues haven't. And you're right, we've been told we will be prioritized.
So how do they do it? I mean, if you haven't even heard about it, the last mile is supposed to be very tough.
Yeah.
It's the million-dollar question. I think there's a lot of exciting activity going on the COVID vaccine. I think great progress is being made. I don't necessarily think healthcare workers will be prioritized by the end of this year, but it would be really wonderful in January.
You don't
certainly
think?
My colleagues that are working in hospitals, you know, they, God goodness, without them, what will we do, right? So it's an urgent matter.
We want to make sure we heard right. So you do not think healthcare workers will be prioritized this year when it comes to the COVID-19 vaccine?
How. We're already, I don't see how. We haven't heard anything. The news is that we will be, but my own personal opinion, I don't see how we will be, with which vaccine, how are we going to roll that out, how are the hospitals being notified? You know, I'm on staff at hospitals, for example, and I haven't been informed as of yet.
Wow, I'm surprised about that. Although, like, I think that speaks to what we've all been talking about, how difficult it will be ultimately in, you know, the logistics and the distribution, and we still have yet to approve it.
Right.
That's the point, right? So what are we giving these healthcare providers? Is it approved? How are we rolling it out? COVID cases are rising. So the same people that are working to build these vaccines and prioritize and approve are also susceptible to whoever is affected by COVID and their family members, right? So it's just this incredibly difficult rollout. I certainly feel for the people that are behind all of these efforts.
Hey, Renee, hang on for a second. Dr. Renee Duo, we're going to come back to her. We're talking with her. She's founder and chief medical officer of HEAL, on the phone from LA. And as we are speaking, headline crossing the Bloomberg, California reporting a record 20,759 new virus cases. Those numbers are just continuing to add up.
Records.
Yeah. All right, we're going to continue. It's really troubling when you see that. All right, you are listening to Bloomberg Business Week. Carol Massar, Tim Stenovic, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you are listening to Bloomberg Business Week on this Wednesday. I'm Carol Massar along with Tim Stenovic of Bloomberg Quick Take. We're going to get back to the founder and chief medical officer of HEAL, Dr. Renee Dua. We really were kind of blown away by what she said about not expecting the vaccine to get to health professionals
Right.
before the end of the year.
She's the type of person who should be getting the vaccine, her staff as well.
So
And they haven't heard anything.
No, which makes sense because we know this is tough in terms of distribution, but a little troubling. All right, we're going to continue that in just a moment. We know Charlie Pellet's standing by very patiently. Stocks taking an uptick. Maybe that's on that stimulus headline.
Indeed, shot in the arm for the U.S. stock market right now. Stocks trading near records as a jump in crude oil prices pushes shares of energy companies higher. Also, investors are monitoring those stimulus talks. Let's get right to the numbers. S&P up 5 now. That is a gain of about 0.2%, trading near highs of the day. The Dow is up 31 points now, up by 0.1%. NASDAQ remains lower by 9, a drop there of just about 0.1%. Keeping an eye on the 10-year, the yield there, 0.95%. Treasury yields up for a third day. Gold is up 0.8%, $18.29 the ounce. And West Texas Intermediate crude up 1.6%, $45.26 for a barrel of WTI. A new report out 30 minutes ago from the Federal Reserve finds the U.S. economic recovery remained moderate across much of the country and did show signs of a slowdown in areas where virus cases are particularly high. That's according to the Fed's Beige Book report. Stocks again trading near records. The UK becoming the first Western country to approve a COVID-19 vaccine, with its regulator clearing American drug maker Pfizer, and Germany's BioNTech a shot ahead of decisions in the U.S. and the European Union. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
You know, I think it's the first in many approvals to come for all of this work that everyone has been doing so hard to get these vaccines ready to go. I think we won't be far behind in the U.S. with Pfizer and Moderna already prepping their submissions for emergency use authorization. We're hearing that they'll be reviewed sometime next week. So it's exciting news for sure.
Moderna shares there up now by 1.7%. Pfizer advancing by 3%. BioNTech higher by 5.8%. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. CVS Health and Walgreens Boots Alliance are preparing to administer COVID-19 vaccines in tens of thousands of nursing homes and assisted living facilities across the country. Shots possibly rolling out in just weeks. Recapping, S&P up 6, a gain of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, much appreciated, Charlie. Thank you so much. Stocks really now at their highs of the level, and it has to be, as Charlie mentioned, on that headline that Pelosi and Schumer backing a bipartisan plan as a base for stimulus talk. So it does look like we're getting some progress there. Let's get back, though, to the virus, where it does feel like we do make some progress, but we still see some troubling headlines. Still with us is Dr. Renee Dua. She's founder and chief medical officer of HEAL, still with us on the phone from LA. Renee, I have to tell you that Tim and I were talking in the break, and we're just like, we were shocked when you said that you didn't think health professionals were going to get the vaccine by the end of the year, because it just feels like it's been moving in that direction. If indeed that's the case, when do you think realistically you could see you and your team and some of the hospitals that you're affiliated getting access to the vaccine?
I think it'll probably be January. Again, as we talked about, there needs to be an approval on which vaccine, how to transport the vaccine, how to roll out the vaccine to these thousands and thousands of frontline employees, you know, the respiratory therapists, the nurses, the doctors. There's so many people in a hospital that help take care of patients. We're all frontline, and so that's an enormous rollout.
Does the timing of how you think you're going to get a vaccine, does that change how you think the general population will be vaccinated? Will it still happen this summer, or do the challenges remain too tough logistically to roll this out on a widespread basis in the U.S.?
I personally think it's going to be logistically difficult, but I've seen it done before. I remember years ago when there was an H1N1 breakout, and there was a particular vaccine that was offered in my community. I was able to line up at a park and I was able to vaccinate myself and my husband.
Wow.
So I definitely think it's a possibility, and I remember just being so impressed with the efforts made and how much hard work it must have been to roll it out. I definitely think it can be done again. I think the value in starting with hospitals, hospital staff, and patients means that those zones become an area of safety for everyone. And I think from there, rolling out to general populations, of course, we're always going to have people who refuse to be vaccinated. So rolling out to general populations is going to be another interesting dilemma, but definitely will be done.
How much of that are you seeing among your own patients?
It's a great question, especially as it's flu season right now, and there's this suspicion that being vaccinated for the flu can in some ways help if you do get COVID and have symptoms of COVID. And so we are seeing, interestingly, more patients want to be vaccinated for the flu, which is wonderful. We do deliver flu shots to our patients who are our primary patients and use us for their physicals. So we are seeing that we can add those flu shots on for them, and we add them on for all the members of the home, which I think is a wonderful service that we are able to offer. And I hope, the pharmacies and the doctor's offices that work alongside with us are seeing similar use cases for the flu vaccine.
How do you recommend that people stay safe when they go to the doctor? You heard me joking about not going to the dentist since January. It's not a joke, it's actually true. What precautions are people taking when they're going to the doctor just for a checkup?
Right. And so first I would say if Heal's in your community, you should use it, right? You shouldn't go to the doctor's office. But second, I would say if we're not in your community and you are going to the doctor's office, first step would be to take your temperature at home, make sure you don't have a fever. Second step would be to wait in your car with a mask on and call your doctor's office and ask if your doctor can see you and if you should wait until you can be seen. Third, I would avoid waiting in waiting rooms at all, right? This is the trouble with the doctor's office.
Yeah.
This is where infections happen. And finally, I would ensure that the doctor and the staff are all wearing PPE, they have face masks on, they have gowns and gloves, they're washing their hands, and so are you between visits. And finally, I would book your follow-up when you leave the office. So maybe give a phone call and schedule your follow-up outside and in the safety of your own car.
I got to say, I've done a fair amount of things, even gotten a root canal, Tim, and the medical community, all of them are taking it really, really
So
seriously.
you're saying there's no excuse for me not going
There's
to the
no
dentist.
excuse.
All right, I'll do it.
But I'll leave it for you. All right, Renee, thank you so much. Dr. Renee Dua, founder and chief medical officer of Heal, on the phone from Los Angeles. Yeah, listen, and especially like routine tests, there were things I put off, and as soon as like June hit, July, went and had it all done because I was a little worried about what was going to happen here.
Well, that's going to be a big unintended effect or consequence of this, right? Is the health procedures that people have put off, the testing that they've put off, and we're going to see that play out over the next few years.
Right, and you're hoping that somehow the numbers can be controlled because there are going to be people who need either going in for cancer treatments and so on, and you just don't want that healthcare system maxed out too much. All right, you're listening to Bloomberg Business Week. Let's get another check on world and national news. Over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. Lawmakers from both sides of the aisle continue to put forward ideas for a new coronavirus stimulus package. 3 possible assistance bills are in the mix, one from each party and then one bipartisan version. Senate Majority Leader Mitch McConnell's GOP proposal is the smallest at $500 billion. And Treasury Secretary Steve Mnuchin says it's the one most likely to receive approval from President Trump.
The president will sign the McConnell proposal that he put forward yesterday, and we look forward to making progress on that.
McConnell's bill contains a variety of measures that were rejected by Democrats, including legal liability protections to businesses. It also does not include major funding for state and local governments outside of schools. Lawmakers also need to fund the federal government by December 11th to avoid a shutdown, and Bloomberg's Amy Morris has more on their strategy.
Senate Majority Leader Mitch McConnell says lawmakers are likely to pass an omnibus funding bill and a coronavirus stimulus measure all at once. That sets the stage for a series of rapid negotiations in a lame duck session. McConnell says it is challenging and slow to move legislation, so a stimulus bill attached to an omnibus measure will likely come in one package. That's a lot of work and not likely to pass this week, so Republican Senator Richard Shelby says they'll try to get it done by December 9th. In Washington, I'm Amy Morris, Bloomberg Radio.
Newly Newly released federal court documents indicate the Justice Department is looking into whether people tried to pay the White House in return for a pardon. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much, Nancy Lyons. This is Bloomberg Business Week. Carol Massar along with Tim Stanovic of Bloomberg Quick Take. This story, man, we've had like real estate stories. I think we've said this before, every day.
Yeah, and I would not have seen this coming.
Why?
Back in March and April.
Pre-COVID.
Yeah,
Yeah.
but the fact is that interest rates have stayed low and people want to move.
Yeah, I was just talking to a friend yesterday who is true, in the city forever. She and her husband, they have 2 kids. They were staying here, and they'd been thinking about the suburbs, and they finally did it. They're like, especially under the pandemic, they're just outside New York, so it's happening.
Now, demand is so high that we have a story in Bloomberg that says that condo buying is booming as well because houses are getting too pricey because everybody wants to buy them.
Yeah, in New York's Westchester County, condo contracts up by about 24%. If you back out the Hamptons and North Fork on Long Island, they were up about 6.5%. And we've been hearing this about. There's a period where Greenwich, like they were talking about all these mansions like for sale because nobody, the financial guys were moving out. Nobody wanted to be there. Corporations had moved out, and now they're back in fashion.
Yeah, and even high-end condos in Greenwich pricing between $2 million and $3.99 million. There were 3 of those contracts.
Yeah, that's pretty pricey. And they talked about houses, too. They talked about, let's see, you did mention the condos, more than tripling in November from a year ago, contracts. And a lot of the deals, though, below $1 million. But some of these high-end ones.
And look, it's back to what I was talking about yesterday and the idea that the pandemic has just accelerated many of the trends we were seeing. If I think about my own friends, and they were thinking about moving to the suburbs in the next few years. Right?
They
what
have
they
kids.
Ended up doing, they have a kid, they have another kid on the way. They ended up buying a house a few weeks ago, and they just closed. So, and they're moving.
Right.
So that's what's happening.
And all I'm going to say is the next crop of kids coming out of college, and they're going to say, yeah, I'm going to go live in New York City. And I've heard so many people...
Because it's a steal, especially in Manhattan.
Especially right now. There are a lot of landlords who are saying, okay, knock off a month or 2, or we'll knock off these fees.
And here's a free Peloton, by the way.
And here's a free Peloton, which is another one of the COVID trends that we're seeing. But anyway, check out more. Ashrat Carmel, she follows all things New York City real estate for us here at Bloomberg. Always a great read. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks have turned higher, S&P at a record amid renewed optimism over stimulus talks and a jump in the shares of energy companies. Treasury yields up for a third day. The dollar's fluctuating right now. We've got the 10-year yield at 0.94%. S&P up 5 at 36.67, up by just about 0.2%. Close to highs of the day. We've got the Dow up 38, higher by 0.1%. NASDAQ lingering near a record, down 13 now, lower by 0.1%. Again, we've got gold up 0.8%, $18.30 the ounce, in West Texas Intermediate crude up 1.5%, $45.21 a barrel, lifting energy shares. Recapping S&P, holding on to a 5-point gain, up by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie Pellet. Thank you so much. So we've been talking, Tim, a lot about this past week, right? About the upcoming Airbnb IPO, which could be one of the largest this year. I mean, expectations are high.
Yeah, more than $2 billion is what they're planning to raise, and this company's seen quite a turnaround this year. It's been shocking the way they've been able to fix the business.
Well, that's such a good point. We talk about companies pivoting in COVID-19. So let's get to this story by Bloomberg News real estate reporter Patrick Clark, reporting for Business Week, talking about the company's ability to adapt during the pandemic. Patrick joins us on the phone in New York City, along with Bloomberg Business Week editor Joel Weber. Joel on the Access line from Brooklyn. You know, back in March, Joel, I wouldn't have thought we would have been talking about an Airbnb IPO. That's for sure.
Totally, and I mean, we did. We talked to Brian Chesky, the CEO, even kind of mid-pandemic or a couple months ago at least, and I think even then we were hesitant to say if they were going to be a winner of the pandemic or not. But spin it forward a couple months, and here we are, and they're probably on the brink of an IPO, and they've really managed to adapt. And it speaks a little bit to their business model and how their business model is different from their peers and competitors, which they acknowledge in their paperwork, their pre-IPO paperwork. And, that's why we asked Pat to kind of explain it all to us. So Pat, what allowed Airbnb to pivot and adapt when so many of their competitors have, frankly, not been able to do so?
I think it comes down to two things. Were they lucky or were they good? And they were a little bit of both. The pandemic has been really bad for the travel industry all over, but even worse for airlines than for hotels, and worse for business travel than for people going on vacation. People have needed to get out of their house and get a change of scenery since they're spending so much time at home. And Airbnb, despite trying to, or at least eyeing ways to get into, either the air travel or sort of business travel businesses, they haven't really stood those things up. So in that sense, there was no business there to lose. On the other hand, they've been pretty skillful at sort of steering into the demand that's out there. So they have figured out how to, promote and, find places for people to go get away that they can drive to. And some of those were already on their platform, but they've figured out ways to both expand that supply to meet the demand, and then to help their customers find those places. There's only so many houses in the Hamptons, so where do they take you next when you can't?
But it has been a little painful for Airbnb. The company did have to lay off 1,800 workers. That was about a quarter of its total. The company had to cancel marketing efforts. Talk to me about the valuation, how it was cut just a few months ago when they raised debt, and then how much it expects and how it expects to be valued when it IPOs.
Yeah, it really speaks to the sort of whiplash nature of this experience. I think in April they went out and raised debt to shore up their finances because the road ahead looked really perilous. And as of March or April, the potential of going out into the public market and raising money through an IPO would have seemed somewhat far-fetched. So they they raised capital in April, and when they did, it valued the company at around $18 billion, which was down substantially from what the company had been worth in I think 2017, and it was valued at $31 billion in a funding round, and now at the upper end of the range that they are talking about pricing shares at in their most recent filing. I think it valued the company at upwards of $35 billion.
Wow.
So twice what it was worth in April, which is pretty incredible.
Yeah.
So, Pat, I got to ask about a parallel that you draw in the story, which I had not heard before, but like one actually sector in the hospitality business that's done an especially good job during the pandemic is sort of the budget hotel line. And one of the comparisons you draw is that actually that's a bit of a comparison as a competitor for Airbnb, at least from a price point perspective. But there's also that downside, which is that Airbnb has also been exposed to, where there's crime at the budget hotel side. Airbnb has this party house kind of problem, and that's been a little bit of a rain cloud on the IPO as well. Can you talk about how they're attempting to address that?
Well, I think I think Airbnb has, they've had these issues for a while, and they have attempted to address them for a while, and they do background checks. They won't let, I think in some cases, effectively they won't let people below a certain age, book houses in their hometown because it indicates they're not, going on vacation. But, if they're booking close to home, that indicates they may be looking like a party house, and they'll screen out some of those. So they take steps. The nature of their business is there's no clerk at the lobby desk, right? There's no lobby. There's no way to see. I mean, presumably there's some way, but there's no, they don't have hands-on personnel watching, who comes and goes into their listings. And as a result, that creates an environment for people to, do what they do, throw parties, and sometimes that leads, in bad directions. I mean, the hotel industry broadly deals with some of these issues as well, but it does, I do think at the lower end of the hotel industry, I think the problems are a little more rife, and it kind of goes back to the same question, right? It's like, do you have somebody? The hotels who have somebody at the front desk, kind of paying attention to what goes on the premise are less likely to have sort of rampant crime problems than a motel where, maybe there is no front desk. It's the old school motel where you drive up to your front door and you bypass the lobby entirely. Or maybe, the hotel is just turning the other cheek because it's a type of business that is better than no business.
Yeah, it's interesting. I just want to know who just opened up the back door to let the dog in. One of you guys? I knew it. We knew it.
Carol called it. Yeah, he was so clawing, and I was just like, I got to get him out. I'll do it really quietly, and maybe they won't hear.
I looked behind me to see if there was a dog coming into our studio.
Where's the dog? Where's the dog?
It's the joys of working from home.
We've all been.
You had maybe an Airbnb for your dog. Yeah,
Exactly,
totally.
exactly. Well, it's a great story. Guys, thank you so much. Really appreciate it. Joel Weber, editor of Bloomberg Business Week. What's the name of the dog, Joel?
Rocky.
Rocky.
Yeah. You can have him.
Rocky. All right, Pat Clark, thank you so much as well. Real estate reporter at Bloomberg News on the phone in New York City. Only because I know I'm opening and closing the door for the dog all the time.
You called that, Carol. You knew exactly what happened.
It's like an old-time radio show, right? Like, like the little sound effects. I think it's interesting. You and I were talking about Airbnb and like renting out your house or something, and my concern is like, how well do you screen these people? And especially if you're not home. I know people who rent rooms in their home. That's different.
Yeah, I'm not going to do it. I'm not going to do it, Carol.
Right. I'm not going to let Rocky in. Definitely not. All right. You are listening to Bloomberg Business Week. If you're listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, stick around because Bay State Business is next.
Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, December 2nd. It is a Fed Wednesday, and a Federal Reserve report is signaling the economy's prospects could be dimming as the coronavirus surges. And with more, here's Bloomberg's Vinny Del Giudice.
The Beige Book says economic growth stalled in places and business optimism waned. The report compiled by the Fed's 12 district banks also found evidence of troubled loans, especially in retail and leisure. The Beige Book will help shape the agenda at the Fed's next policy meeting in mid-December. Vinny Del Giudice, Bloomberg Radio.
Stocks have turned higher amid renewed optimism over stimulus talks and a jump in the shares of energy companies. The S&P's up 7 now, high of the day, up by about 0.2%. That is a record. We've got the Dow Jones Industrial Average up 63, higher by 0.2%, 29,888 on the Dow. Nasdaq down 5, little change, down less than 0.1%. 10-year yield 0.94%, down 6/30 seconds. Gold is up 0.8%. $18.29 the ounce, and West Texas Intermediate crude up 1.6%, up 71 cents a barrel, 45.26 on WTI. There is evidence job growth slowed in November as coronavirus infections increase. The ADP employment report showed a gain of 307,000 jobs, the smallest since July. The government issues its employment report on Friday. Aviation job losses have risen by about a third in the last 3 months after a resurgence of the coronavirus stalled hopes of a late summer recovery amid fresh travel restrictions. About 620,000 positions have now been cut since the COVID-19 pandemic began. This according to analysis by consulting group 5 Aero. Among some of the aviation stocks today, UAL, that's the parent of United Airlines Holdings, it is up 2.4%. American Airlines Group up 3.2%. Delta up 2.8%. Southwest rounding out the big four, up now by 0.7%. Lyft lowering its outlook for fourth quarter growth. Lyft shares, they are pushing higher today, up by 10.2%. Uber, crosstown rival in San Francisco, up 6.3%. Charlie Pellet, Bloomberg Radio.
This is Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Right, but for this Wednesday edition of Bloomberg Business Week, I'm Carol Masser along with Tim Stenovic of Bloomberg Quick Take. And this story, man, when it hit this morning on the right, everybody was talking about it.
Yes. How can you pardon yourself?
How can you pardon yourself, right? And we're talking about the news we got. The New York Times did a great story about President Trump discussing with advisors about granting maybe some preemptive pardons, at least according to those in the know. We've also been reporting that U.S. prosecutors are investigating whether several individuals offered political contributions in exchange for a presidential pardon, again, according to an unsealed court document. So someone who has a front seat to this, and you talked to him earlier, is Eric Larson.
Yeah, we talked to Eric on Quick Take earlier today, and the big part of the conversation that we focused on was the idea that what is the precedent for doing this, for pardoning people preemptively?
Yeah.
And in fact, it exists.
Which is kind of wild. All right, so let's get into the history. Eric Larson, standing by patiently, U.S. legal reporter at Bloomberg News, on the phone in Brooklyn. So what is the precedent for this, Eric?
Well, it really is. It is unprecedented. No president has ever tried to pardon themselves before. Nixon sort of came close after the Watergate scandal, but he was advised that that's not something that could be done. Of course, he was pardoned by Gerald Ford, but that claim by the DOJ that a president can't pardon himself was never tested in court. So it really does remain to be seen whether that old DOJ advice stands. And of course, Trump, it seems like a million years ago now, but in 2018, Trump tweeted that he had a, quote, absolute right to pardon himself. And certainly there are legal experts who back that up. There are others who disagree, but it really hasn't been tested yet. So we really just don't know.
What about when it comes to pardoning members of his own family if they haven't yet been charged with a crime?
Again, that is something that is within the realm of the president's power to pardon. It is a very vast power. There's not a lot of rules in there. As long you can't pardon, a president can't pardon someone for crimes that they have yet to commit. You can't just grant someone a get out of jail free card for life. But if there are crimes that they may have already committed, even if they haven't been charged yet, for example, potentially his children, then that is something that he could potentially get a preemptive pardon for. The risk there would be that the president would have to lay out in some sort of document what it is that he believes his people would be charged with.
That's what's kind of wild. Like, right, don't you want to see that document? Like, well, just in case my daughter gets charged with this or something, right? Like, you kind of, here's the list, everybody.
Yeah, you're giving a lot away about how you feel about somebody's guilt if you're pardoning them before they've been charged with something. I mean, pardons are used for criminals.
Right. But President Trump has a way around that, I would think, in that he has called, all of these investigations involving him and others a witch hunt. There's a large portion of his base and other fellow Republicans who buy into that and might view a preemptive pardon as just a way to get around corrupt Democratic investigations. Not that that's what they are, but you could see that he might spin it that way, and that a lot of people might actually accept it, given what we've seen the last few years.
Well, and I do wonder, the prosecutors who are looking into this, who are these people specifically? And I just wonder, in terms of leanings, as kind of friends of Trump or not.
Well, I mean, we've seen already that Trump is pretty ready to give out pardons to friends. As far as his family is concerned, really the biggest potential threats that you see legally are coming out of state investigations, particularly New York State and the New York Attorney General, Letitia James. But of course, a president's pardon doesn't cover state crimes. So there's, even with all of this talk about a preemptive pardon for his family, that could potentially relate to federal crimes, perhaps things that were outlined in the Mueller report, obstructions of justice potentially, or something like that. But really, there's a big area of exposure there with the New York State crimes as well.
So what is the threat that President Trump and people close to him face from states like New York?
Well, the New York Attorney General has been investigating the Trump Organization over potential bank and insurance fraud, essentially misvaluing large assets in order to get some benefit, a tax benefit or insurance benefit or bank benefit. These were allegations that were laid out by the president's own former lawyer and fixer, Michael Cohen, in congressional testimony that sort of kicked off this New York investigation. There was a big fight over the state's subpoenas earlier this year. And just a month or two ago, Eric Trump, the president's son, was forced to testify under oath. He was deposed as part of this investigation. No one has been accused of any wrongdoing in that investigation. It's just a civil probe. But nevertheless, it does illustrate the kind of risk that you see they could potentially face, whether it's with the New York Attorney General or the Manhattan District Attorney or whatnot.
Do you anticipate we're going to get some news on actual or additional pardons soon, or is it going to be kind of in the 11th hour, in January? What are we expecting?
Well, I don't have any inside information on that, but I would have to say, just based on what we've seen about with this president, is that we'll probably see, this is just a guess, but we'll see a flood of pardon activity potentially that could, be right up into the last days or hours of his time in office, which isn't unusual, but given the way that Trump has used the pardon to create sort of controversy, you could see that it would be some big news when it happens, clearly.
Eric, just quickly, can ever a presidential pardon be questioned?
I think that it can. When you're talking about a pardon for whether or not it's too broad, some investigators might want to rein in to say, well, this pardon doesn't actually cover this behavior, or as we said, a pardon of oneself, that remains to be seen. So if there's going to be a test of the pardon power, I could see it coming in the next few months.
It's just another interesting aspect of what's already been an interesting political year.
Yeah, and I mean, President Trump has expanded the power of the presidency significantly. And when we talk about precedent, he's set a precedent for how much power a president has, and it has been relatively unchecked by his own party.
Well, and some would say this whole use of executive orders, and we've seen it certainly under the Obama presidency, and that happens when you get gridlock in Congress, that's the only way the president can kind of move forward on some policies. And so...
And we might see it from Biden if Mitch McConnell and the Republicans hold on to the Senate in Georgia.
But this is wild, and I would expect that we're going to get a little bit more on that. Eric Larson, always wonderful in explaining what's going on there. Eric Larson, U.S. legal reporter at Bloomberg News, joining us on the phone from Brooklyn. All right, back to World and National News, and let's check in once again with Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. German company BioNTech says it is ready to ship out the coronavirus vaccine that it developed together with Pfizer to Britain. in the next few days. Britain is the first country to approve the vaccine for emergency use and expects to start giving out doses by next week. BioNTech's Chief Commercial Officer Sean Merritt tells Bloomberg the company is ramping up production.
We've added a factory which we bought from Novartis, completing in October, and we're bringing that up to speed. That once it gets into steady state, we expect that to produce 750 million doses per year. Pfizer at the same time are bringing up their manufacturing as quickly as possible.
The CDC, meanwhile, is revising its quarantine recommendations for those who are exposed to COVID-19. CDC now says people could leave quarantine without a test if they don't experience symptoms 10 days after exposure or after 7 days with a negative test and no symptoms. The White House press secretary Kayleigh McEnany is refusing to say if and when President Trump will admit defeat in the election. Yesterday, Attorney General Bill Barr said his office had found no evidence of voter fraud. But McEnany says the president still has a few irons in the fire.
The president has said that he believes all legal votes should be counted and all illegal votes should not be counted. And in fact, the campaign is pursuing that litigation. I can't get into the details of that litigation here, but they still do have active cases in Nevada and Wisconsin.
President Trump's campaign has lost nearly 40 court cases and has provided no proof of election fraud. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Oh, to be a fly on the wall, because we just had a really great conversation, Tim Stenbeck and me, about Bob Iger, and we were talking about Disney. The reason is Chris Palmieri, who is our LA bureau chief, has a story on the terminal. You can check it out at Bloomberg.com, but it's about Walt Disney's Bob Iger, longtime CEO, now chairman, or I think I forget what his special title is.
Yeah, executive chairman.
Executive chairman, that he would consider a job in the administration of incoming U.S. President Joe Biden if the right position came along.
And it's so interesting to hear that, given that there were murmurings of whether or not he would actually run for president in 2020, which obviously didn't end up happening. But, you know, who knows how he would have fared.
There's always been a little bit of politics around him. I know when I spoke with him, we did a deep dive for TV and radio inside Disney a few years ago. And there was speculation that he might run for mayor of New York. And at that point, you know, it wasn't necessarily on the table. But there's also, you know, so it's interesting to see that this could be a possibility.
Okay, so what position within a presidential administration do you think would be a good fit for Iger?
I have no idea.
I don't
what
know
do
either.
you think?
I have no idea either. I mean, he could be some sort of special envoy, but given his background in running a business that spans the entire world, that has big roots in Asia, we could see him in some sort of ambassadorship. I don't know.
This story doesn't say it, does it?
No, and that's what.
Like I'm thinking commerce now. That's kind of a little dry for him. I mean, this is somebody who is, you and I were talking in the break, really visionary. When I interviewed him, we also did a deep dive on Pixar. Like he understood taking these brands and then just, you know, moving them around the platforms. They were in the parks, there was merchandise, there were movies. You know, Marvel, like what he did with that franchise is pretty incredible. And he let them run as their own entities. ESPN was its own thing up in Connecticut.
And everybody thought Disney was too late to streaming. And guess what? They weren't. And I was shocked to see him step down from the CEO role so quickly after launching Disney Plus. And look at what's happened to Disney now with the theme parks and the way that it struggled during the pandemic.
And now really focusing and saying that they're going to do that deep dive even more so into streaming. We'll stay tuned on this one. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at records on the S&P, trading close to session highs. It is a mixed day, though. The Dow higher, NASDAQ lower. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bailey Lipschultz.
Good afternoon, Charlie. As you said, stocks are lingering near record highs as investors kept an eye on stimulus talks. The Dow is up 60 points, S&P higher by 5, while the NASDAQ is off 5 points. U.S. 10-year yield is at 0.94%, and small caps are higher by 5. 6 of the 11 main S&P sectors are trading higher, led by gains in energy and communications, while materials and real estate led to the downside. NASDAQ Biotechs dropped 10, transports gained 60, semis added 10 points, while the VIX is unchanged. Leaders in the Dow, Boeing, Chevron, and Walgreens, while Salesforce, McDonald's, and Home Depot are the worst performers. In deal news, Salesforce fell the most since March on plans to buy Slack in a deal worth about $28 billion, and NetApp surged as second quarter results beat expectations. Regarding vaccines, BioNTech and Pfizer rallied after their shot was approved in the UK, and Merck sold its stake in Moderna. Wrapping things up, it's another busy day for software earnings with results from Snowflake, CrowdStrike, and Zscaler after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. It is time for the Bloomberg Green segment brought to you by PGIM, the investment management business of Prudential. Join the pursuit of outperformance at PGIM. Learn more at pgim.com. That's PGIM.com. So let's get to our weekly Bloomberg Green segment. It's a deep dive into how the new energy giants are, well, probably not what you might expect, especially in a week where ExxonMobil is about to incur the biggest write-down in modern history. We are definitely, Tim, seeing the energy world turned upside down.
The acceleration of trends. I can't say it enough. It's what's happened during the pandemic.
I love it. I love it when it comes to certainly the renewable companies. So let's bring in Brian Eckhouse. He's energy reporter at Bloomberg News. Let's get more on his story. He joins us on the phone in Los Angeles. So Brian, good to have you here with us. Tell us a little bit about your story, because the new energy giants, they're not the ExxonMobils of the world. They're the new or the renewable companies that have really made great progress and great strides.
Yeah, absolutely. These are companies that are greatly utilities that may not be the household names like an Exxon, like a BP, like a Shell. It's Enel of Italy, Iberdrola, NextEra, which is a big utility based in Florida. It's Ørsted. These are companies whose market caps increasingly are rivaling that of the big oil majors, but their names are known mostly like in Florida or in their home countries in Europe. But they prioritize, buying and building of solar farms and wind farms when it was still very expensive. It was alternative. And now much of the world is increasingly going toward clean power. And these companies, these utilities that invested early on when it was expensive, they're kind of positioned now for this growth that's happening right now in the U.S. and elsewhere.
So what did they see when the big energy companies weren't seeing? What did they see that they didn't see?
I don't know if it's not what they didn't see. It's more because they're already in power. They're the ones that were...
Sort of like the innovator's dilemma, right? You don't want to cannibalize your own business?
Perhaps a little bit of that. I think also these are companies that are tasked with making sure that our lights are on at all times of the day. BP, Exxon, Shell, they're companies that really worked over the world to find oil, to find gas. Different part of the energy world, but increasingly as we move to electrify more and more things, cars, homes, etc., the energy world, whether it's electricity or the ones that pulled oil and gas out of the ground, it's increasingly becoming like one world.
Well, I got to say, before we got going, Brian, I was reading to Tim, I said, I love this. Renewables are now, this is in your story, renewables are now the cheapest form of new electricity in most of the world. I mean, I remember years ago, houses with solar panels on them, it was really cool, it was really new, but they wouldn't sell. It just wasn't as viable. And we've really turned a corner, Brian, when it comes to this.
Yeah, absolutely. For a long time in the U.S., particularly when it came to rooftop solar, it was really boom and bust based upon the availability of subsidies.
Mm-hmm.
If they'd go away, there'd be a rush to get panels on your roof before they went away. Now we're seeing a little bit more steadiness to this. And during the pandemic, rooftop solar has done pretty well. There were questions if there would be installations able to be done back in March and April.
Right.
By June, a lot of the companies that do rooftop solar turned the corner, doing things remotely in terms of getting inspections and sales. So you're actually in for a banner year. We're looking at a record year this year for rooftop solar in the U.S.
Wow, I mean, that's surprising given that the way that the Trump administration actually made it difficult and more expensive to buy some of these products to put on your roof. I wonder, Brian, how the economics have shifted in recent years for these renewable companies. What has made it more affordable for these types of investments to be made? Why has it accelerated during the pandemic?
I mean, a big reason is that rooftop solar at large, wind, it's a lot cheaper. In a lot of the U.S., solar and wind is the cheapest form of electricity. Not everywhere, but a lot of places. Even in Texas, wind has dominated for a very, very long time. And the last 18 to 24 months, solar has really boomed there and is looking at a major wave.
I mean,
of development.
we can't ignore the symbolism of that, right? Texas, this is a state that was built on oil.
Right.
Absolutely. And in fact, to that point, we're seeing solar power actually electrify oil operations in West Texas.
That's great.
There's interesting integration going on there, which you wouldn't have thought of 2 or 3 years ago.
Hey, listen, just got about 45, 50 seconds. China, we talk about they continue to build coal plants, but they are some of the largest owners of wind and solar capacity, right? And will likely continue to be. So they are playing a big role in all of this.
Yeah, absolutely. China is a dominant player in solar, particularly. A lot of the solar that comes to the U.S. is either made in China, or more likely it's made by companies that are China-based, done elsewhere in Asia. China is the definite global leader when it comes to solar in terms of their own installations and how they produce panels that are put in elsewhere, including here in the U.S.
Brian, I can see reporting on the energy majors, right? We've gone from those old traditional big oil companies and the integrated oil companies, and we're now going to be talking about these kinds of companies going forward just quickly.
Yeah, but we're still going to see the big oil companies, play a role going forward.
All right.
So it's a bigger field.
Good stuff, though, and good to have on our radar. Brian Eckhouse, thank you so much. Energy reporter at Bloomberg News on the phone from L.A. West Coast, did you see a lot of solar when you go back home?
A ton. My parents installed it a few years ago. It made sense, yeah.
That's great. I love it. I love it. I'd love to see more renewables as much as possible. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Massar along with Tim Stenovic. Bloomberg Quick Take, doing like his 20th hour on broadcast.
Hey, I love it.
We're lucky to have him. Coming up, we're going to do the chart of the day. You're 2 for 2? No, 0 for 2? 2 and 0? How do you say it?
I'm 0 for 2 right
0 for
now,
2.
and let's try to go for 1 for 3. I did cheat yesterday, though, Carol, and I got it, and I cheated.
I'm
so
sorry.
I'm still going to say
it's a bad habit, and I'm sharing it with you. We're going to get to Dave Wilson and his chart of the day in just a moment. First up, back to your top business stories and a check on that trading day. Hey, Charlie.
Well, hello there. 28 minutes to go ahead of the closing bell. The Senate has voted to advance Christopher Waller's nomination to serve on the Federal Reserve Board, clearing the way for final confirmation tomorrow in what could be President Trump's last chance to shape the central bank. Stocks edging higher. S&P at a record amid renewed optimism over stimulus talks. Also a jump in the shares of energy companies. Let's begin with crude. It is up by 1.5%, 45.21 WTI. West Texas Intermediate up 66 cents a barrel. The 10-year yield 0.94%. Stocks higher. S&P up 2 points now, up by about 0.1%. The Dow up 48, up 0.2%. A retreat for NASDAQ down 20, a drop there of 0.2%. NASDAQ 100 index down 0.1%. Russell 2000 is up by 0.2%. The United Kingdom has become the first Western country to approve a COVID-19 vaccine, with its regulator clearing the American drug maker Pfizer and Germany's BioNTech shot ahead of decisions in the U.S. and the European Union. The emergency authorization clears the way for the deployment of a vaccine that Pfizer and its German partner have said is 95% effective in preventing illness. The shot will be available in Britain from next week. For medical professionals and logistics experts, the big challenge now is actual distribution and inoculation. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health, and she was interviewed this morning on Bloomberg Television.
In these first phases of the prioritization, where we're trying to target these most high-risk populations, there will probably be vaccination stations set up. But for the general public, we'll have a system in place where we can get them in, get them vaccinated, make sure we have rigorous documentation on what vaccine they got and when their booster should be, because they're all going to be slightly different for the different vaccine types that are out there.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares up today by 3.2%. BioNTech up by just about 5.1%. CVS Health and Walgreens Boots Alliance are preparing to administer COVID-19 vaccines in tens of thousands of nursing homes and assisted living facilities across the country. Shots possibly rolling out in just weeks. Today's CVS shares, they are advancing up by 3.1%. Walgreens Boots Alliance up by 3.7%. Recapping, stocks mixed. S&P up 5, up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic, and this is Bloomberg. It's talking. It's got to be. I was going to say talking heads, right?
Right.
Wow,
okay. Wow, we actually
both of
got that.
us. Yeah, but Tim got it.
We got it. So I'm
we
1 for
didn't
3. That
cheat.
was, yeah. Thank you for making that an easy one.
Well, I'd say it's 1/2 for 3. The other half is getting the song title.
Oh, fine. Stop
No.
making sense.
No, you think so?
Yeah,
because
wait,
it was
wait.
actually the title of a live album that featured that song.
I don't remember what they were saying. What were the lyrics?
He was just saying,
Well,
stop making
the title
sense.
Stop
didn't
making
show up
sense.
in that particular piece of it, called "Girlfriend Is Better."
Oh yeah, I would have
I
never
got a
gotten
girlfriend that's better than that, etc.
Okay.
I'm trying to remember if David Byrne did that song in the American Utopia show on Broadway. I suspect he did.
But Stop Making Sense is the title of a Talking Heads movie, right?
Right.
A very, very
That's what
good
I'm
one.
saying. The live album was
Yeah.
based on that movie. Yeah.
Okay. All right, so there we
we're
go.
all on the same page.
Here we go. Not bad.
It's getting better.
Week's halfway over.
Got it. All right, so Dave, take us to make the connections. What's the connective thread to your chart of the day?
Well, you could argue that if you look at stock valuations, at least for some people, they don't make sense. In fact, Jim Reed, who's over at Deutsche Bank, put out a chart today that focused on the CAPE ratio, cyclically adjusted price earnings ratio. This is the indicator developed by Yale University's Robert Shiller.
Right.
That's based on average earnings over 10 years. Okay, so it's not your typical price earnings ratio, but it's a variation on it. Well, I came across this commentary on that was published earlier in the week on Project Syndicate, which Shiller writes for. And he and two other co-authors looked at something called the excess CAPE yield. Let's break it down. So you take the CAPE ratio, right, and then you sort of turn it on its head and come up with an earnings yield. So if you've got a CAPE of 30, it works out to 3.3%. So it's 100 divided by the ratio. Okay, so that's your starting point.
I'm like back in college, economics. Go ahead, Dave.
Look, what you're trying to do is figure out how much yield you get on stocks relative to bonds. And in both cases, you're adjusting for inflation. So, you take like the 10-year Treasury in the case of the U.S., and then adjust it for the inflation rate and come up with what's called a real yield. Okay, so when you run those numbers now, or at least when you look at the latest data, which Shiller puts on his website,
right?
You come up with a gap of 3.9 percentage points favoring stocks over bonds. Well, you go back, the chart actually goes all the way back to 1900, but if you focus on the last 50 years, it turns out the average gap on a monthly basis, 3.8 points. In other words, it's practically the same as where we are now.
So stocks aren't as expensive as people think.
In relative terms. I mean, we're talking about a relative value indicator here. People have to make decisions. In absolute terms, historically, stocks might be expensive. But, you've seen the argument come up before that, relative to bonds, it's not such a skewed kind of a comparison. And it's just a different way of kind of looking at things. I mean, if you're going to make a decision about where to put your money, it's the sort of thing you have to do.
Right.
And if you want to take a look at what Shiller's numbers are saying, send me an email. I'll get you the chart. The explanation goes with it. And everything I do going forward, the email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I mean, it's a good indicator. A lot of people follow it, right? And it maybe explains why, once again, we're seeing some of those names that everybody said, oh, no, we're done. We're seeing rotation, but, you're seeing money pile back into them.
Yeah, I mean, it's all part of the mix. The CAPE ratio is a whole lot more popular from Shiller.
Yeah.
This is a relatively recent
CAPE
creation.
yield, you're right.
The whole kind of yield comparison argument, yeah, that's definitely been out there in different forms over time, and it's really part of the mix when you try and figure out what to do.
A little Shiller, a little talking heads. Who'd have thunk? Bob Shiller would be very happy, I think, about that connection. Dave Wilson, I'm just saying.
I hope he would.
All right, good stuff. I know you're going to come back a little bit later on with your stock of the day. Dave Wilson with his chart.
And thanks for going easy on us, Dave, with the song.
Do you think he went easy?
Yeah, that was totally
okay.
easy.
It was a gift. Let's get a check on world and national news. Back over to Nancy Lyons in D.C. Hey, Nance.
Hey there, Carol. Britain has become the first country in the world to authorize a rigorously tested COVID-19 vaccine, and it could be dispensing shots within days. BioNTech's Chief Commercial Officer Sean Merritt tells Bloomberg they are ramping up their production.
For all countries, we're producing and will have ready up to 50 million doses this year, and we will be sticking to that target.
He says they're adding factories to handle the increase in demand. Federal Reserve Chairman Jay Powell and Treasury Secretary Steven Mnuchin are urging Congress to approve COVID-19 relief funds without further delay. House Speaker Nancy Pelosi and Senate Minority Leader Chuck Schumer now say they will support a $908 billion package released by a bipartisan group of lawmakers. Ronna McDaniel is launching her bid for a third two-year term as chair of the Republican National Committee. Bloomberg's Nathan Hager reports.
The GOP did better than expected in U.S. House races despite President Trump's loss on November 3rd. In her letter to the RNC's 168 members, McDaniel says she has the support of President Trump, as well as Senate Majority Leader Mitch McConnell and House Minority Leader Kevin McCarthy. The president endorsed McDaniel about a week after Election Day. That could give him more sway over the party as he considers another run for president in 2024. In Washington, I'm Nathan Hager, Bloomberg Radio.
Arizona Democrat Mark Kelly was sworn into the U.S. Senate this afternoon, shrinking the Republican majority. It is now 52 Republicans, 48 Democrats. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Massar, along with Tim Stanovic. We had to convince Tim to do this story. I don't know. You got a problem with Bill Ackman?
No problem with Bill Ackman.
All right, just check it.
It's
just
the
check
FTSE that I have the problem
with. It's the FTSE. Well, listen, this is kind of interesting. We've talked so much about Tesla, right, being dumped into the S&P 500. This is about a fund run by billionaire Bill Ackman, hedge fund. We know it well, Pershing Square Capital Management. He's going to join the UK's blue chip stock age, and we're talking about the FTSE 100. Who'd have thought?
I know. And, Carol, the reason why I said, I don't think you're missing it. I think the fact is the FTSE as an index is completely underperforming U.S. indices. And look at this. It's down more than 14% year to date, whereas the S&P 500 is higher by 13% and the Dow higher by 4%.
And apparently it's a global company because the Pershing fund is incorporated in Guernsey. The Channel Islands. I was trying to figure out how they do that, right? But so it's interesting. So we'll probably be looking at this fund a little bit. And you do wonder how to kind of skew the index because we know this is someone who's played with Starbucks, played with Chipotle.
In fact, Chipotle is its biggest equity holding as of August 25th. Lowe's companies as well. So the takeout food chain accounts for has been up by 55% this year, whereas Lowe's is up 26% just in 2020.
He was pretty aggressive on some of these names. I mean, that's what he does, right? He gets involved as an activist investor, and I think he might have pared back some of his Chipotle holdings. But I got to tell you, I'm going to actually sit down with the CEO of Chipotle tomorrow.
Okay, I didn't know if I could talk about that. Is this public?
I don't know.
All right, well, you heard it here first.
So
you got a big interview.
We're going to hear from a lot of people. But I have to say, I've talked to him on our air here, and I mean, he has done such a phenomenal turnaround for that company. Took off like a rock, the stock last year, also running higher this year. But what's interesting is, I mean, it's a focus on digital, and he really helped the company bounce back from all of those, food problems.
And he came from Taco Bell.
He did come from, he loves
moved the company's headquarters to California from Colorado, where
Mm-hmm.
Chipotle was based, and he has done incredible things for the company.
Yeah, exactly. So stay tuned. That's all I'm going to say. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell with the Dow, the S&P higher, NASDAQ lower, S&P at a record amid renewed optimism over stimulus talks and a jump in shares of energy companies. West Texas Intermediate crude up 1.5% now, 45.20 a barrel among some of the energy names. ExxonMobil up 4.2%, BP up 4.3%, EOG Resources up 2.8%, Pioneer Natural Resources up now by 1.7%. S&P up 6 to a record 3668, up 0.2%. The Dow's up 66 points, up by 0.2%. Again, best level for both the Dow and the S&P. NASDAQ remains lower, down 11, a drop now of 0.1%. Gold is up 0.8%, 18.29 the ounce, and the 10-year 0.94%. I'm Charlie Pellet. That is the Bloomberg Business Flash.
I'm driving in my car, I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, we've just got about 11 minutes left in today's trading session. Tim, we're kind of hovering near our highs of the day. I think people are upbeat about maybe some stimulus ultimately. I don't know.
This could maybe happen.
Maybe. Yeah.
Who knows? Can't see the future.
Don't count your chickens yet. Or your eggs or whatever it is, right?
Yeah.
Chickens before they're hatched.
Yeah, that's right.
Let's bring in Kirk Hartman. He is President and Global Chief Investment Officer at Wells Fargo Asset Management. They've got $607 billion in assets under management, and they're looking at all kinds of asset classes. Kirk certainly oversees all of them: fixed income, factor-based, quantitative. He is with us on the phone from Los Angeles. It's a little bit of a wacky day, Kirk. How are you?
We're doing fine. California is a bit of a lockdown with restaurants being closed, but otherwise, we're doing as best we can.
Yeah, I do wonder. It does feel like, we've all been like, we've seen this movie before. We know what happens if we don't start to rein in and shut things down. And it does feel like officials are closing things down pretty quickly, which I think a lot of people and health professionals would probably say, yep, that's the right thing to do.
Well, I think that's right. Obviously, the concern, we all want the virus to slow down, is the effect on the economy. And, you worry about restaurants and small businesses and, those types of issues.
Yeah, I wonder when the issues that small businesses are having, that restaurants are having, when does that start to have an effect on the U.S. economy, and then traders actually see that as a risk for stocks?
Great question. There's clearly a disconnect between the normal life and the markets. I think what's very interesting is that the small caps, which to me are a much better of the broader economy, have come back very strong. I mean, we were down 40%, and now we're up 10%. So small caps have come back a lot, which hopefully is a sign that the smaller business world. But, we'll have to see. But look, everything is predicated on a great rollout of the virus. So my concern is that the rollout doesn't go as smoothly as everyone hopes, because clearly these markets now are pretty much priced for perfection.
Well, and what's interesting is you can talk about small caps. I mean, they had quite a run in November, longest run that we've seen, or biggest bounce we've seen in some time. Small caps, though, are not kind of, I think, small business America. And I do wonder that disconnect, Kirk, that we continue to see between what's going on Wall Street, which is one thing, and then what's going on in a lot of America.
I agree with that. In fact, I had the same thought a couple of minutes ago, that small caps are obviously public companies, and they are probably behaving somewhat differently than the private companies and the smaller companies. 50% of the U.S. economy is smaller business. Right. So that's why I think everyone is so worried and concerned and hopeful that we get another stimulus package.
If we don't, what are your expectations? Because I do wonder then, do we fall into even a deeper recession, and it's going to be one that's going to be much more difficult to come out? And then ultimately, that will drag down everything.
Well, that is the concern. I think that with low interest rates and the Fed committed to low interest rates, and I think the expectation of some kind of stimulus coming is probably pretty good, especially with Georgia elections coming up in January. There's pressure on both parties to come up with something. So I am optimistic, but very much so. Either a slowdown on the rollout of the vaccines or a turn down, another turn down for small business could be very damaging.
What if the yield curve continues to steepen?
Well, I think the yield curve will continue to steepen, which is helping the banks. And I think that it's important to remember that almost a third of the small cap indices are banks. So a steeper yield curve is very good for financials and banks, which I think is why it's powering the financials and the small cap.
So where do you want to be in this market environment right now, where I feel like, Kirk, depending on the day, people are like, okay, we're seeing a rotation in the markets. Oh, nope, we're seeing a return back to, the momentum players. So what is your best guess, especially when we know it's probably going to be a tough month or two through, until we get through the holidays, get through this next wave of the virus, and as we wait, for the vaccines to come out. We heard earlier from a guest, Dr. Dua, who's out there on the West Coast, saying specifically she didn't expect the healthcare professionals to get the vaccine before the end of the year, and their priority.
Well, I think we all have to hope that the healthcare professionals and the primary caregivers get them quickly. Yeah. I think that the market will do okay. I think that we all know the vaccine is coming. It's just a matter of time. And you saw the good news out of Europe. So I think that that is a very positive sign.
Okay.
And, you go ahead.
I was just going to say, I want to talk history here and go back to the flu pandemic of 1918 to 1920, because as you were talking to our producers, you talked about how that was followed by the Roaring Twenties, which I think if we look at any sort of historical context here, what can that tell us about how you're thinking about these Roaring Twenties, which I have to say, Carol, did not go off to a great start.
No, didn't we fall into a depression after that?
We did, but 2020 has been, I think, the year's not over yet, but it's fair to say this has been like the longest year of my life.
Yeah, exactly. Kirk, what do you think?
Well, the historical analogy, I think, is very apt. The 1918 and 1920, you had 600,000 Americans died because of the flu pandemic. You had the Roaring Twenties, but you then had the Great Depression. And I don't think we're going to have a Great Depression, but I do think we are going to have to deal with the debt. So there's no question in my mind that there's so much money in the system. Our money funds have gone from $100 billion to well over $200 billion. There is a lot of money on the sidelines that's going to go to work. The question is, we have clearly borrowed from the future to pay for the present, and understandably so, but we're going to have to pay the piper at some point. So that's the risk that's looming out there.
Right, and especially with expectations of some more maybe relief, so that deficit just goes up a little bit more. Kirk, thank you so much. Really appreciate it. Kirk Hartman, President and Global Chief Investment Officer at Wells Fargo Asset Management, $607 billion in assets under management, on the phone from Los Angeles. Like, I remember for a long time, Tim, the deficit hawks, and we would just talk about it ad nauseum.
Remember them?
Well, it's just like we would constantly talk about U.S. debt, and then I remember the downgrade not so long ago, right? Just a few years ago. And I'm just thinking, and then we kind of got away from it all.
Carol, I think it's political.
You think what do you mean?
Yeah, Republicans love to go after Democrats who increase the deficit, and we had heard nothing of that over the last 4 years when President Trump ran up the deficit to record levels. And we're about to start hearing about it again from Republicans when Biden gets to office.
Yeah, so get ready, right?
Yeah.
All right, folks, we've just got about 3.5 minutes left in today's trading day, and it's been an interesting one, Tim. We're off our lows of the session. We're going to probably finish just off our highs of the session. I think there is expectations that maybe we get a little bit more relief out of Washington. You're listening to Bloomberg Business Week. Carol Masser, Tim Stanovic, and this is Bloomberg Radio.
Hits, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Wednesday, December 2nd. Folks from OGE Energy ringing that closing bell, and a record for the S&P 500 index. This update brought to you by Witham, a forward-thinking advisory and accounting firm helping clients to be in a position of strength in the new reality of business. Learn about their innovative solutions by visiting witham.com. S&P up 6 to 36.68. That is a gain of 0.2%. The Dow up 61 points, also up 0.2%. It was a down day for NASDAQ, falling 5, down less than 0.1%. The NASDAQ 100 index eking out a gain of less than 0.1%. Russell 2000 up by 0.1%. Stocks edged higher amid renewed optimism over stimulus talks and a jump in the shares of energy companies. Treasury yields up for a third day. The dollar fluctuated. Again, S&P up 6, a gain of 0.2%. S&P at a record. So just what are the concerns for investors with the S&P up 13.6% so far this year? Kirk Hartman is Global Chief Investment Officer at Wells Fargo Asset Management. He was our guest moments ago right here on Bloomberg Business Week.
Everything is predicated on a great rollout of the virus. So my concern is that the rollout doesn't go as smoothly as everyone hopes, because clearly these markets now are pretty much priced for perfection.
NetApp surged after earnings. Biggest gainer in the S&P 500 index, reporting second quarter results that beat expectations. NetApp shares up today by 9.4%. Salesforce.com and Slack both fell following the announcement of their $27 billion deal. The acquisition gives Salesforce a popular workplace communications platform in one of the biggest tech deals of the year. Salesforce down 8.5%, Slack down 2.6%. Recapping S&P at a record up 0.2%. Charlie Pellet, Bloomberg Radio.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
All right, time to take a little bit of a deeper dive into the markets. Carol Master along with Tim Stenovic here in our Bloomberg Interactive Brokers studio. So I'm going to start big picture a little bit here, Tim. Look at the S&P. And a little bit of an even split, a little bit of a more bullish tone. 275 names in the S&P 500 higher today, 229 lower, one unchanged. If I look at the 11 major industry groups in the S&P 500, also somewhat of an even split. Energy, once again, atop that list, where energy has seen so much pressure, and they're either, I feel like, at the bottom of the pack or the top of the pack. So top of the pack today, followed by financials up about 1%, communication services up about 1%. Materials were your worst performing major industry group in the S&P, down about 1.4%. So, that's kind of what the trade was like.
A split day.
A split day. And it wasn't until really, we were off our lows when we kicked off, but when we got that stimulus head, we did take a little bit of a leg up, a little bit.
And like we were talking about, it remains to be seen whether or not a stimulus deal actually happens by the end of the year. But
right.
It seems at this point that obviously investors are optimistic about it, and I wonder to what extent they're pricing it in right now.
Yeah, especially when you think about all the Fed officials and everybody who's saying, listen, we've done pretty much everything we can do.
Yeah.
It's up to you guys to do some kind of, fiscal, basically providing money for businesses and individuals. We can't do that. Right. So, should we talk Salesforce?
Let's talk a little Salesforce.
So, Charlie mentioned Salesforce was down about 8.5%. Slack, which it is buying, was down about 2.6%. But if you recall, about a week ago,
yeah.
Sorry, the synapses aren't firing today. Slack was up like 37%. So a lot of the expectation already built in.
Right. The expectation was there. It was reported early, so this wasn't a surprise.
Exactly.
But what's interesting to see today is the reaction from investors when it comes to Salesforce. Because are they just wondering, hey, did Mark Benioff pay too much for this company?
Right.
Salesforce shares, as you mentioned, down, close to 9% today.
Yeah, exactly. So we're definitely seeing some selling. Let's talk about Spotify.
I'm so excited.
I know. I should have
this is the one we should have led with.
I was making him wait. So Spotify, let's talk about it, up 12% today.
Yeah, Spotify's up 12%. Now, the reason is because Joe Rogan has become exclusive to Spotify, according to Bloomberg News. It was as high as much as 16% earlier in the day. It fell off of those highs at the close. The podcast from Joe Rogan became exclusive to the platform. But what I want to talk about is the buzz that's being generated by this 2020 end of the year feature.
Yeah, you were talking about this. What is this?
Okay, so basically, if you open your Spotify app
Yeah.
in the last couple of days, you'll have this custom page made for you that really looks a lot like a long Instagram story. And what Spotify has done is they've taken all the data from what you've listened to and come up with what you've listened to the most, what genres you've listened to, how it's changed from previous years, how you compare to other listeners. And everybody is sharing this on social media. Spotify has done a great job of making it easy to share. At the bottom of each one of these pages, there's a share this story.
Curated your list.
Exactly.
And then sent me a check for $10,000 because that's my data.
Yeah, exactly. I was going to say, are you one of the most streamed artists on Spotify? Are you getting paid by Spotify?
I mean, listen, I think it's a really cool thing, and I think most people will think it's a cool thing, but that gets to that bigger story about who owns that data.
It's
That's
so
valuable.
True. And it's so true, Carol. And Spotify was really early to being able to harness this data to serve you music that you're interested in. Apple Music was late to this, and that's why I still think that Spotify is among the industry leaders, because we're not going to discover music the same way that we used to, right? We're using these apps. We're not talking to friends in the same way, right? We're finding music on Spotify.
Exactly. Listen, they've definitely disrupted, I hate to use that word, it's overused, but I mean, they really have in terms of the music industry. It's pretty remarkable. How do you feel? Like, my husband and I used to have TiVo, and, back in the day, but it was, you'd watch something, then all of a sudden they started to, like, oh, maybe you'd like to watch this, or maybe you'd like to, and part of it was like, okay, that's kind of cool. Part of it was like really creepy.
I think we're desensitized to it. I mean, I think Netflix has done a really good job with this because it's sort of made that its selling point. Like, we know what you want to watch before you want to watch it.
Yeah.
And
creepy.
Look, it's creepy, but we're not looking as much as we had to previously.
Joe Rogan, what do you think he's getting paid? Is there any numbers?
Oh gosh, I don't have this off the top of my head, but I believe that it was reported when it was like $80 million. Don't quote me on that.
Everybody who ever says like, oh, you want to do a podcast, you should do it like Joe Rogan.
Yeah, well, I mean, the numbers that he gets are just mind-boggling.
And the guests he gets.
It's like higher than cable. It's like you think somebody watches a lot of Fox News, right? No, it's Joe Rogan gets more viewers or more listeners than single leading cable network does.
All right, well, that was fun doing Spotify. It's a little creepy, all that data. All right, you're listening to Bloomberg Business Week, and this is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson! All right, Mr. Wilson, come on in with your stock of the day. What do you got for us?
iRhythm Technologies, Carol. The company makes a heart monitor called the Zio. Patients wear the device for as long as 14 days and then mail it to iRhythm. The company analyzes the data and sends a report to the prescribing doctor. Now, iRhythm was founded in 2008 and went public in 2016. The ticker is IRTC. This year, the shares have jumped as much as fourfold as the company has posted narrower quarterly losses than analysts expected. iRhythm retreated today in response to a decision on Medicare and Medicaid reimbursements for next year. The U.S. agency that runs the healthcare programs didn't set a national payment rate for products such as the Zio. The rate was left up to local contractors. The ruling led to concern for some iRhythm analysts that 2021's reimbursements might not increase the way they expected. Citigroup reacted this way in a note, and I'm quoting here. To say that this is a surprise at this stage of the process is an understatement. There were certainly some investors who were surprised. iRhythm shares fell more than 20%. That was their second biggest decline ever, and the largest was a 21% drop back on March 16th.
That's going to hurt, right?
Yeah. Oh, yeah.
Unbelievable. Well, that's what happens, though, in terms of those reimbursements. It can make or break a company. We've seen it time and time again. Dave Wilson, thank you so much. Bloomberg Stocks columnist Dave Wilson. Check out also his chart of the day, which he gave earlier. You're going to desert me.
That's it. I'm sorry.
Something I said. The Spotify? Was it the data comment?
No, it wasn't. Don't worry.
Busy day, good day. I know you're going to take a break. I'm going to be busy with the big Business Week B50 event, and then we're going to come back on Friday.
Friday. We almost made it a week, Carol. Not yet.
Sounds good. We're almost there. All right. You have a good evening.
Thanks. You too.
All right. You're listening to Bloomberg Business Week. We're going to continue, and right now we do want to get a check on world and national news. For that, over to Ed Baxter in San Francisco. Hey, Ed.
Hey, Carol. UK Prime Minister Boris Johnson is announcing the COVID-19 vaccine is now being distributed.
The virus has got to be stored at minus 70 degrees. Each person needs 2 injections 3 weeks apart. So it will inevitably take some months before all the most vulnerable are protected.
In the U.S., HHS Secretary Alex Azar says the country is ready here.
That means we can make our first shipments of vaccine to states this month. And we are on track to be able to ship enough vaccine for 20 million Americans before the end of the year.
But New York Governor Andrew Cuomo says it's not just a snap of the fingers.
There has to be funding to administer the vaccines. It's not enough to say, we'll deliver them to your state. That's very nice. FedEx can deliver them to the state.
Meanwhile, the White House is defending its large Christmas party in defiance of warnings from top U.S. health advisors. Spokeswoman Kayleigh McEnany obviously believing that 2 wrongs do make a right.
If you can loot businesses, burn down buildings, engage in protest, you can also go to a Christmas party.
Correct me if I'm wrong. Did she just put having the party in the same group as looters? California today has set another case number record, over 20,000 day to day. The CDC has shortened contact quarantine to 10 days if there are no symptoms. Iran's top political chamber has now given final approval to a bill forcing President Hassan Hussein to end the international nuclear inspections unless key sanctions are lifted by February. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
All right, Ed Baxter, thank you so much. This is Bloomberg Business Week. Carol Master joining me right now is the lovely Charlie Pellet. And man, we see an airport story and we all think, or maybe you think, this is a story we've got to do.
I love airports. When I fly, one of the things I try to do sometimes is get connecting flights to places that you wouldn't actually think you'd need to connect.
I love airports too, you know that? I love wandering around them. It's crazy.
I do too, but JFK to London, there's one way to get there for most people. Not me. I try to go via Toronto or Zurich or Geneva or Amsterdam and spend time in the airports. More takeoffs, more landings, more frequent flyer miles, and more airports to explore.
So this story, courtesy of Wall Street Journal Dow Jones, says slow recovery seen for JFK Airport's busiest terminal. And so I guess they said that their passenger numbers might not return to pre-pandemic levels until 2024. And so they're scaling back, I guess. They've been doing a big refurbishment and expansion, so they're scaling it. They were going to do $3.8 billion, but they're scaling that back, Charlie.
Yeah, and in essence, as I read the story, my reaction was, quote, can you blame them?
No.
Part of the reason being is they're also waiting for federal money, too, that may or may not come through. And that also will affect, plans for reconstruction. Got to say, though, LaGuardia, depending on which terminal you fly, it's looking good these days.
Oh, have you been there recently?
I have, roughly a year ago, coming in on a Delta flight, and it got a whole bunch better.
Man, well, listen, don't you remember, who was it? Oh, man, I can't believe
it was Joe Biden.
Right, it was Joe Biden, right? He said that it was like a third world airport.
Yep, exactly.
Well, listen, this is what we've talked about a lot on our air, and you've done a lot of stories. I've done a lot of interviews and stories too, and it's just about like infrastructure spending and really shoring up some of our airports, some of our roads, and this is really part of these kinds of projects. We've just got to work on them, Charlie.
Exactly. One additional aviation note, guess what? You can no longer take emotional support animals such as peacocks, alligators, or pigs. They're going to be banned from flying from the Department of Transportation. Just wanted you to know.
What will Poppy my peacock do now?
I know, and if I'm in 12A and you're in 13A and all of a sudden we got an alligator, we've got a problem.
We've got a problem. All right, Charlie, thank you so much.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, and we do begin with earnings news after the bell. Today, we did hear from Snowflake moments ago. First earnings since its debut. Snowflake shares down now by just about 5%. Third quarter revenue coming in at $159.6 million. Estimates on Snowflake there, $147 million. PVH is the retailer reporting third quarter adjusted EPS of $1.32, $3.10 year over year. Guess third quarter adjusted EPS 58 cents. Estimates there were for 8 cents. Costco reporting sales. November total comparable sales up 13.4%. Estimates on Costco were for sales of just about 13.8%. And this headline from the Bloomberg Professional Service, XPO Logistics is going to spin off its logistics segment. The Dow, the S&P both higher. S&P at a record. NASDAQ fell 5, down less than 0.1%. We had the S&P up 6. That was a gain of about 0.2%. Equities edging higher today amid renewed optimism over stimulus talks. Jump in oil also giving oil stocks a lift. Dow up 59, higher by 0.2%. 10-year down 4/32. 10-year yield 0.93%. Gold up 0.8%, $18.29 the ounce, and crude, West Texas Intermediate crude up 1.5%, $45.22 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, much appreciated. You're listening to Bloomberg Business Week. Carol Master in our Bloomberg Interactive Broker studio. Now, this story has been most read on the Bloomberg for the past 8 hours. It has been there all day, and it's really about a story that reminds us that it's nothing like getting in between a man and his money. And we're talking about former Goldman Sachs President Gary Cohn playing hardball to hold on to his past pay. Let's get into it with Sri Natarajan, finance reporter at Bloomberg News. Sri is with us on the phone in New York City. So great story. This is what everybody's reading on the Bloomberg. It's an exclusive. So what's going on here?
Thank you, Carol. And I mean, just to remind our listeners, about 6 weeks ago, Goldman Sachs was finally able to put this big scandal that had dogged it for much of the last 5 years. It admitted to a criminal role in the plundering and the looting of the Malaysian investment fund 1MDB. It had to pay out about $5 billion in fines just to be able to break free from a series of probes in the U.S., in Europe, in Asia. And over and above that, the Goldman board said, look, we really want to make it clear that we're aware we've taken a reputational hit. This was an institutional failure, and we want to attach accountability to our most senior executives under whose watch this happened. So they said that they will look to reclaim about $67 million from 5 former top executives. At the time, they said we still have to sort out claiming that money from one executive. That lone holdout was Gary Cohn, the former number 2 at the bank, the former president of Goldman Sachs, the same person who went on to become the economic chief in the Trump White House. 6 weeks later, it still looks like Gary's playing hardball. He hasn't returned the cash. He told Bloomberg that he's having constructive negotiations with the bank. The bank, for its part, is not commenting. And it remains to be seen whether Gary will actually end up returning the amount in full.
So for those who maybe didn't follow 1MDB, I mean, this was a huge corruption scandal. And as you said, Goldman has had to pay dearly because of it. And so they are, trying to claw back from executives. Gary Cohn was there when 1MDB happened, correct?
That's right. This all ties back to bonds that Goldman Sachs helped raise for the investment fund in Malaysia, 1MDB, back in 2012, 2013. Gary Cohn then was the president of the bank. He's, of course, moved on. Lloyd Blankfein was the CEO of the bank, one of the 5 executives from whom Goldman is trying to get, or Goldman is getting back money from. He's, of course, retired. David Solomon, who's the current CEO, was the head of investment banking at the time. That's the division that was responsible for raising these funds, that ultimately that we found out through prosecutors and investigators that a tremendous amount of bribes were paid to be able to spread this money around, to be able to eventually for people tied to the Malaysian Prime Minister to be able to loot this money. And Goldman admitted to criminal wrongdoing, admitted to taking sort of being involved in paying out about 1.6 billion in bribes that eventually led to so much money being raised and then subsequently looted.
So what happens, as he said, he's having, constructive conversations with Goldman Sachs on that. So do you anticipate that what will happen is they'll come to a number so that they can make it all go away? I mean, nobody wins. This doesn't look good for Goldman Sachs, right? It doesn't really look good for Gary Cohn either. So as most things happen on Wall Street, they happen behind closed doors and there's arbitration or whatever, or there's some kind of negotiation. So what do you anticipate might ultimately happen?
I mean, look, that's something for all of us on the outside to judge. Should we be treating this as a regular bid-ask spread where one side comes up with a figure, the other side comes up with a lower figure, and then you reach a settlement? Because remember, you're not trying to execute a trade here. This was Goldman Sachs' very public attempt to say, hey, we repent and we want to atone for our sins, and one way to do that is by holding our leaders accountable. Now, if it emerges that, one of the leaders who was the number 2 at the bank, he wasn't a nobody. He was a very important, critical, central figure at the bank at the time when all of this went down, is haggling over this, is negotiating over this, then irrespective of whatever settlement you use, whether you 8 weeks later are able to convince him to part with the entire cash or only get a discounted amount, do you really walk away with the feeling that they truly repent?
Yeah. It's pretty remarkable, right? It's like things were done that weren't supposed to happen, and there were penalties imposed. And then, this whole idea of clawbacking, right, where it makes those senior executives in whatever company or whatever industry accountable. I think many people have thought that was progress in terms of making sure that there isn't kind of sloppy behavior in the C-suite. Sri, great story, as I said, most read story on the Bloomberg. I'm glad we could find some time for you to come on and join us and talk about it. Sri Natarajan, he's finance reporter at Bloomberg News, joining us on the phone in New York City. And as I mentioned, it is the most read story on the Bloomberg, really has been all day, that exclusive of Gary Cohn playing hardball with Goldman and to fight those clawback demands by the company. All right, for those of you listening in New York, also listening in San Francisco and watching on YouTube, Bloomberg Business Week, we're going to continue. If you are listening on Bloomberg 99.1 in DC, Sound On, though, with Kevin Cirilli is coming up next. And coming up next, we're going to get a check on small business. We heard our market guest talk about the importance of seeing what's going on with the small business community to get a better idea of what's going on in the broader economy. So we'll check in with the head of small business at Bank of America. That's coming up next, right here on Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week. I'm Carol Massar in our Bloomberg Interactive Brokers studio. We talked about the importance of small business. We do it often around this table here in our studio. We're going to check in with the head of small business over at Bank of America, see what she is seeing. They've got a recent survey out, so we'll get really kind of the pulse of the small business community in just a moment. First up, though, let's get back to Charlie Pellet and look at some of the news after the close. Hey, Charlie.
Well, hello there, Carol Massar. Lots going on, lots of headlines to pass along to you. The Australian dollar rises past its year high to the strongest since 2018. More coming up on the Aussie dollar tonight on Daybreak Asia. JP Morgan Chase's asset management unit is buying fintech company 55IP, giving it control over technology that helps investors cut their tax liabilities. Snowflake, that's the software maker that debuted with the year's biggest IPO, gave a lackluster product sales forecast for the current quarter, signaling fierce competition in cloud computing. Shares down now by just about 6%. After the bell, we also heard from Zscaler. It boosted its adjusted EPS forecast for the full year. That guidance beating the average analyst estimate. Shares up by 10%. Costco reporting total comp sales for November that missed the average estimate. Shares falling down about 2% after hours. And Gap says 77% of holiday shopping site visits were from mobile. It was a mixed day on Wall Street, but the S&P 500 index edged higher, a record on the S&P, up 6, a gain there of 0.2%. Second consecutive day of records for the S&P. The Dow up 59, higher by 0.2%. NASDAQ had a down day, a little change but lower, down less than 0.1%, down by 5 points. 10-year down 4/30 seconds, 10-year yield 0.93%. Gold up 0.9%, 18.30 the ounce, and West Texas Intermediate crude today picking up 1.3%, WTI 45.07 a barrel. The UK became the first Western country to approve a COVID-19 vaccine, with its regulator clearing the American drug maker Pfizer and Germany's BioNTech shot ahead of decisions in the US and European Union. Pfizer shares up 3.5%, BioNTech up today by 6.2%. Sean Merritt is BioNTech's chief commercial officer, and on Bloomberg Radio and Television this morning, he talked about getting the shots out there and actually into people's arms. And here's what he had to say.
In terms of distribution, I mean, when you receive this vaccine, it really is, you roll up your sleeve, you get an injection in your arm of this vaccine, and then you wait a few minutes, as is customary, to make sure that there are no side effects that wouldn't be expected, and then you go home. And it's pretty much like getting a flu vaccine.
So again, we did see BioNTech up today by 6.2%, Pfizer up 3.5%, the other closely watched vaccine stock, Moderna, up today by 1.4%. Recapping equities mixed, S&P edging higher, up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. So, survey just out about what's on the minds of small businesses. Small business, we've said it a zillion times, backbone of our economy, and truthfully hurt disproportionately by the pandemic. We've seen that. So here to fill us in, though, on exactly what small businesses are thinking, kind of where they are right now, what's on their minds, Sharon Miller. She's Managing Director and Head of Small Business at Bank of America, and she joins us on the phone from San Antonio, Texas. Sharon, thanks so much for joining us. Welcome to Bloomberg, or welcome back to Bloomberg. Tell me about, first of all, before we get into the survey, how are you doing? How have things been since March, and how have things changed since March when it comes to what you're seeing for the small business community that you work with, and really just the surrounding community in Texas as we kind of work our way through this pandemic?
Well, thank you so much, Carol, for having me. And, you know, I think the theme is that entrepreneurs, they remain resilient and flexible, and that's not just in Texas, but throughout the United States. I mean, I feel like what we've experienced since March has, you know, it has been unexpected by all of us. And now what we're experiencing today is just that there is resilience, there is flexibility, and people are pivoting to be able to continue their operations. And that's what we found in our report.
Well, that's interesting. Yeah, I feel like if there's one theme for the pandemic, at least in terms of what businesses are doing, it's all about the pivot. But in terms of businesses surviving, I mean, all right, let's talk about the survey. So what is on their minds?
Well, I mean, speaking of surviving, I mean, 85% of the businesses that we surveyed said that they are remaining open. So they may have closed for a period of time, but they are still open today. So, in our survey, we found that 38% of businesses remained open because they were an essential business. Mm-hmm. And then many, as you suggest, pivoted because they have now a new revenue stream because of the things that are happening within our economy. And that was at 37% told us that. So, it's interesting because you do hear across the country that, there's such tough times, and there mm-hmm. no doubt we are living in a tough environment. But I would tell you that business owners, entrepreneurs, they are so resilient. They are coming through this and with optimism and hope.
How are they doing it, though, in terms of financial stability? Because, one of the things I was kind of even amazed, Sharon, the restaurant community, even the established players, the, kind of iconic chefs with name recognition and saying that, it's such a slim margin business and we're kind of living on the edge and it was tough for them. So, you can just kind of make your conclusion there about everybody else, how tough it was. So I do wonder, how are people making do in terms of, financially? Do they have safety nets? Are they able to access money from the financial community, the banking community?
Well, I mean, access to capital, it's not just important in, our everyday life, but it's definitely important during this pandemic. Mm-hmm. And to your point, you walk down the streets in New York and, out of one establishment, the next is, closed. So, you do see this, and that is our reality today. But I do think that, there are many other ways that people are accessing capital, and, whether it's through the stimulus, through the PPP, whether it's through traditional financing, there are ways that businesses are using this as a bridge to get to the other side. And our survey was done in August and September. Mm-hmm. And so you think about that was on the backdrop of, the presidential election. We didn't know about the vaccine. I just heard that in your commercial here before we went on air. And I mm-hmm. feel like there are so many things that give us hope, just as people and humans, as we look towards a more normal society that we live in.
Yeah, exactly. And I saw one statistic that said 42% of business owners applied for at least one type of loan specifically to address the impact of the virus, including the Paycheck Protection Program, PPP. That was about 34%. Economic injury disaster loan, 16%, or a traditional bank loan, about 5%. The top two ways business owners have or intend to use this financing are on payroll and staffing needs, 75%, and maintaining operating expenses, 62%. Sharon, sit tight for a second. I love going through this kind of data and these data points. Sharon Miller, we're going to come back to her, Managing Director, Head of Small Business at Bank of America, with us from San Antonio, Texas. Right now, though, we do want to get another check on world and national news. Let's get over to Ed Baxter in San Francisco. Hi, Ed.
Hi, Carol. Thank you. Both House Speaker Nancy Pelosi and Senate Minority Leader Chuck Schumer have now thrown their support behind using a $908 billion bipartisan stimulus proposal as the foundation for a new round of negotiations with the Republicans and the White House. And even Senate Majority Leader Mitch McConnell seems to be messaging the president.
But at the risk of repeating something we all know, Mr. President, making law will require not just the Senate's approval, but also the signature of the President of the United States.
So he's added yet another stimulus package to the table, one that the president has championed. If my count is right, there are three of them out there now. Meanwhile, Pelosi and McConnell are moving to bring the defense spending bill for a vote in both chambers. This is likely to test the Trump threat to veto. Neither includes the tech liability shield Section 230 removal that Mr. Trump is demanding. CDC has shortened contact quarantine. Dr. Henry Walke, CDC COVID Incident Manager.
Under these options, quarantine can end after 10 days without a COVID-19 test if the person has reported no symptoms, or after 7 days with a negative test result if the person has reported no symptoms.
And CDC Director Robert Redfield says the next 3 months will be the most difficult time in public health history of the nation. California, meanwhile, set another case record number, over 20,000 day to day. The White House press secretary, Kayleigh McEnany, is defending the gala Christmas party plan for the White House by saying if looters can go on the streets of the U.S., the president certainly can have his Christmas party. She also says the president is exploring ways to get certified vote results overturned. In San Francisco, I'm Ed Baxter. This is Bloomberg.
It is indeed. All right, Ed Baxter, thank you so much. You're listening to Bloomberg Business Week. Carol Massar joining me right now once again is our own Charlie Pellet. And this story from our Bloomberg Law team, Charlie, about San Francisco moving to ban indoor smoking in apartments and condos.
Yeah, that's an interesting
Love
story.
watching the West Coast.
But I think the better headline on this is while you can't smoke tobacco inside, you can light up a joint. That is still allowed under this law, and there's a really good reason for
Inside?
it. Inside, so you can smoke marijuana inside the apartment. You can't smoke tobacco, but the reason is for marijuana, it is illegal under California law to smoke cannabis in public places.
I didn't know that.
So that's why this story is the way it is, and that's why the vote came out the way it did.
God, you gotta love it. West Coast, man. It's always the interesting trends, and you do wonder how quickly this will move across the country. I gotta say, but I'm not a smoker. I'm all for it.
I share your sentiments. I have lost family members to lung cancer through people who smoke, and I'm with you on this. By the way, there are 63 California cities and counties that now have such a ban, but clearly when it happens in a place like San Francisco, that's big news. And as you correctly say, when things happen in California, very often they move from west to east.
Yeah, we've seen it with car standards and emission standards. Like, things get adopted and then they move across the country. But it's significant to see this. I find it baffling, and I it's fun to have conversations with people who don't remember this. But when you could smoke on planes and there was smoking and non-smoking, and yet all the air was recycled, so basically everybody was getting kind of smoke air.
And as nutty as this sounds, back in those days, even though I hate smoking, I would always request a seat in the smoking section.
Did
Why?
you?
Because there were so few flyers, I could stretch out and have 3 apiece on transatlantic flights. So it is crazy. The fine, by the way, for smoking inside your own apartment, $1,000 a day.
Man, that's going to be fun to police. Note the sarcasm. All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. EPA Administrator Andrew Wheeler is going to quarantine after exposure to COVID. In the banking industry, Investors Bancorp branches are Investor Bancorp buying Berkshire Bank's 8 branches. And the House has cleared a China delisting bill, sending it to President Trump. That headline breaking now on the Bloomberg Professional Service. Snowflake shares trading lower. Snowflake is that software maker that debuted with the year's biggest IPO. It delivered a lackluster product sales forecast for the current quarter, signaling fierce competition in cloud computing. Shares are lower now by 3.65% in extended trading. It was a mixed day on Wall Street. Nasdaq lower, S&P and the Dow both advancing today, but stocks did register a record for a second consecutive day amid renewed optimism over stimulus talks and a rebound in crude oil. Today we saw the S&P up 6 points, higher by 0.2%. Nasdaq down 5, a drop there of 0.1%. To underscore S&P at a record 2 in a row now. The Dow up 59, higher by 0.2%. 10-year down 3/32, 10-year yield 0.93%. Gold up 0.9% at 18.31 the ounce. Crude West Texas Intermediate up 0.8%, 44.91 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Just to rehash that headline that Charlie mentioned, U.S. House of Representatives clearing that China delisting bill. They will be sending it off to President Trump. And so this has to do with concerns about Chinese companies specifically, and has to do with listings specifically on U.S. exchanges of Chinese companies. So again, certainly expected. We've been talking about this over the last couple of weeks, but again, looks like it will go on to the White House. All right, let's get back to our conversation on small business. Sharon Miller is still with us, Managing Director, Head of Small Business over at Bank of America, on the phone from San Antonio, Texas. Sharon, you were highlighting some of what was in the survey. Anything that was surprising to you that stood out? I know you asked about economic concerns, a lot of different things. So anything that stood out for you that maybe was a little bit surprising?
Well, I think most surprising is that, and we talked about it a little bit in the segment before, was around, 85% of our survey respondents said that they had stayed in business. And so
shocking, right? It's kind of shocking.
It is. It was a little surprising to me, I would say. Because you do hear reports of, and it depends on the geography, it depends on the parts of the country, but I do think that was a surprise.
Were there geographical were there geographical differences?
Well, I think it depends on the timing, and so to say there's geographical differences, absolutely. When you think about what's going on in the country and what happens, I mean, just as we sit here today, California, it may be more. More cases that are rising. So, it just depends on the day of the week. And so I do think that, geography does count, and it also counts, the industry you're in. But I don't think anyone was spared in this pandemic. And so, that was what was very surprising as well. I mean, think about it, dentist offices that were closed. And, everyone thinks there will be open all the time. But at the end of the day, when we have the health crisis that we experienced this year, that, it changed the whole outlook.
Yeah, no doubt about it. Well, what are their expectations about what 2021 looks like? I feel like people are getting a little bit more confident, Sharon, because of the developments we've gotten on a vaccine, and we're starting to talk about, logistics and rollout plans, with the caveat that understanding it's not going to happen overnight, right? It's going to take some time, but at least they're feeling like, okay, maybe I can start to think about when this comes to an end, the really shutdown of our economy.
I would agree with you. I mean, I think you're spot on there. I mean, this survey was taken in August and September, and that was before the election. It was before, the vaccine that has been, very hopeful in what's going to be distributed. So I do think even post, 2021, what we heard from entrepreneurs is that over the next 2 years, their revenue stream would get back to normal. And so I think when you have this added benefit of we're post the presidential election, we have certainty there. We're also, we have a vaccine, which we know is going to be distributed. When and how, that's still to be determined. But I do think that we have a lot of hope, and that's what we hear from entrepreneurs. So even before all this was announced, because this was not happening in September during the conversation, but today I feel as we talk with clients, there is more hope than ever.
Hey, listen, I also have some hope. I'm going to switch gears a little bit, so if you can indulge me. I know American Banker named you one of the most powerful women to watch when it comes to the financial community, and which is really wonderful. And I think about what we're seeing with the President-elect Joe Biden and his economic teams. 4 out of 7 key positions in that team are women, and there's diversity. When we look back at this year, there's been a lot of concerns about women slipping back in terms of some of the progress that they've made, certainly in the higher echelon of corporations. How do you see it? What do you think continue to be the struggles? How do we continue to move ahead?
Well, I think to your point, what an amazing appointment of everything that's happening, not just in the presidential, but you think about in the banking industry that's happened this year. Citigroup naming their new CEO as a woman. So there is so much hope and so much on the horizon, and but so much more to do. So I do think that I serve not only as head of small business at Bank of America, but part of the Global Diversity and Inclusion Council, and it is so important to us to be able to have a voice and have differences of opinions, of gender, of race. That's what makes us a better company. That's what makes us a better country. And so all of that added together, to me, that is another piece of hope.
Well, Sharon, do you feel like everything that's happened this year between the global pandemic and what happened to George Floyd in Minneapolis, and we're talking a lot more about diversity and inequities, we're talking about racism. I do wonder, do we make significant progress, or do, when things go back to normal, kind of forget about it, or is the conversation, has it shifted at your company, especially since you understand being part of the Global Diversity and Inclusion Council at B of A? So I do wonder, has the conversation shifted, and is the conversation now turning much more into action when it comes to diversity and inclusion?
Well, what I'm proud about with our company is that, yes, the conversation has progressed, but it was always there. And so I think that what makes our company great and what makes other companies great is that you do have this differences, and you have, differences of opinion, differences of gender, differences of, circumstances, and what your perspectives are. And that's what makes us all better as a company, as a country. And I do think that, with the George Floyd, all that happened, this did put us to the forefront to say, we are standing for racial equality. And it's very important as a company to us. And I'm proud of that. And I think that the more we can do to promote inclusion, to promote diversity, it's going to make us all better.
And forgive me, all that happened. I know it makes, it wasn't the great way to explain it. And it's just been kind of one thing after another. I also, just quickly, 30 seconds, your customers, they're also demanding this.
They are. I think that, we all, I think this makes us all better. And so